Word. The cram course is this Saturday. So don't forget, this Saturday is a cram course, 9 to 5 with Ann Rashid. Lane is going to email you Ann's Zoom link on Friday. So you guys will have it at the close top of your inbox. If you don't get an email from Lane for some reason, please reach out to her like Friday evening. Okay, please, please don't wait until 8:55 on Saturday and try to get in touch with Lane. I don't know her availability. Okay, so if you want to go to the cram course, look out for an email on Lane on Friday with Ann's Zoom link. There is a meeting code that she'll provide. You'll need that to access Ann's call. And like I said, if you don't have it by Friday evening, reach out to Lane. Please don't wait till Saturday morning. Questions, and I remind you guys again on Thursday too, make sure we're all on the same page. Questions on the cram course this Saturday. You don't need to register. You don't need to do anything. If you want to go, you just go.
Do you think we'll get an outline? I have a question. Do you think that, will she provide, I saw you uploaded Ann's notes in the 100% extra resource thing. And is that like the outline that she'll use? I guess I don't know. You may not know. That may not.
I don't. I do know there are some handouts that are included. I don't know what all those handouts are.
Cool.
Is this focused on my exam or state exam or both? Again, I'm not for sure, but I'm going to venture out and say both. I'm hoping to prepare you for both mine. What Stephanie was referring to, if you guys, hopefully you're kind of looking ahead at Learn Test Pass because we're getting near the end. And in the 100% material, here's, remember let's see, that's a practice test. There's good practice tests in here. But there's the end of class exam review. That was my gift to you guys. So if you want to know what's going to be on my end of class exam, ta-da. And also in this is Ann's notes. So that's what Stephanie was just referring to. This is all in the 100% exam material. Another question came in, will the cram course on Saturday be recorded? It will not. Ann does not record her classes. But again, if you're looking in Learn Test Pass, there is a recorded cram course. So Dr. Bowser also provided a cram course and she does record. So you guys have access to that as well. So guys, let me make sure we all understand. When you get to the cram course on Saturday, we may not have covered everything just yet. We'll be close, but we may not have covered everything. So you may hear something brand new for the first time on Saturday, and that's okay. That's all right. We'll cover it again on Tuesday. The whole objective of the cram course is to get you guys to hear some information twice. Okay, so whether you hear it here first and then with Ann, or you hear it with Ann first and then here, doesn't matter as long as you hear it twice. Any other questions about the cram course? This Saturday. Don't forget our final exam is not this Thursday, but next. If you fail the final exam and you make a 50% or better, you're eligible for the retake. And the date of the retake is May 24th. So if you fail on the 19th, but you make a 50% or better, you get a second shot. Not everybody offers you a second chance. We'll talk about, the last thing we'll talk about a week from today, the very last thing we'll talk about are the exam rules and expectations. So that'll be fresh in your mind. So you'll know the rules, you'll know how the retake works. We'll talk all about that next Tuesday. Questions? Question comes in, how do you access the exam? Our exam is provided on a program called ClassMarker. The email that you guys got from Lane that you use to access class every single time, there's a section on class marker that includes a class marker tutorial. So there's a little 4-something minute video about how class marker works. I suggest you take a look at that so you can take that out of your what to expect. You'll know what to expect. It's a separate link. On test day, you guys will get on the call on Zoom like you always do, so I can watch you. And then we'll provide the link. Yep, get a link. Again, we'll talk all about your exam next Tuesday. Last thing we have to talk about. Also for your exam, guys, please remember, I need you in a distraction-free zone. Okay, I've tolerated a lot of distractions in this class. I still am. For test day, I don't tolerate distractions. If I see you talking to somebody, I can only assume that you're cheating. If I see somebody else in the room with you, I can only assume that you're cheating. Do you know what the commission says I'm supposed to do if I suspect you of cheating? Yeah, somebody just did this. Yep, I cut you from your test. So I need you guys in a distraction-free zone. I need you to tell your family, your kids, your pets, everything to leave you alone that day. Fair enough. I also need you guys accessing on a desktop or a laptop. You cannot do the exam on your phones. You shouldn't be taking the class on your phone. You may not connect via a smartphone. So I need you guys, I need everybody to be thinking about where and how you're gonna take your test in a couple weeks. Questions on that? How many questions? Again, guys, we'll talk about the text on next Tuesday. It's 112 questions and you get 3.5 hours. Okay. Good with all that. Distraction-free, cram course. If that's what she told you, then yep. I just meant a smartphone. Tablets, desktop, laptop, iPads, that should all be okay. No smartphones. Okay. Cram course. What else? All right. So we ended last time. We ended in unit 11 and we blew through the end kind of quickly. But we got through the important parts. Nod, nod, wink, wink. So that was my objective. Before we get into unit 12, I just want to point out in Learn, Test, Pass, if you haven't noticed, if you haven't seen it already, there's a sample residential rental contract. So we talked about some common provisions found in a residential contract. You may find some of those similar provisions in this residential. Again, this is just more for reference for you guys to kind of have an idea of what a sample residential rental contract can look like. A lot of a lot of commercial has to do up their own contracts because commercials are just different terms, different agreements. Commercial is just different. I think that's the best way to say that. Commercial is just different. So we have a standard residential rental contract. We do not have a standard commercial that's used much. So that's in Learn, Test, Pass. And now where we are, let me check my list, make sure I covered everything. We did that, that. Okay. So now where we are is in unit 12. You'll remember unit 11 was the relationship between the landlord and the tenant. Maybe a real estate agent was involved, maybe they weren't. It's just the relationship between the landlord and the tenant. So in unit 11, we talked about different types of freehold estates. In unit 11, we talked about how the different ways that rent can get paid. Remember, we talked about a fixed lease and a net lease and a ground lease and all that. We went over specifically the North Carolina Residential Rental Agreement Act. We talked about your tenant security deposit. Again, none of that matters if you have an agent or not. You have a landlord and you have a tenant. That's the focus of unit 11. Unit 12 brings the real estate agent in. So what's happening in unit 12 is the owner of the property hires a broker to manage their property. So property management is all about. You're being called to manage somebody else's property. Anybody thinking about property management, heading that direction? A couple of you? Good, good. So in unit 12, we're going to explain property management. We're going to identify basic elements of a property management agreement. We'll talk about our property management agreement. Little bit of math in this unit, calculate property management fees. And there's also a little section, a little bit of math. I need to add that, but a little bit of math on investors and some investment math, because we are going to talk about investors in this unit as well, because that's who the owner is, right? If the owner has 20 rental properties and they call you and ask you to manage those rental properties, they're an investor. So we need to have a kind of an understanding of how investors work, and that's a little bit of math that we're going to see in unit 12. So before we get started, let's go back to unit 8 for a minute. You guys remember in unit 8, we gave you the formula. We said anybody that needs a real estate license in this state is involved in the transfer of real property for others for compensation. You guys remember our funnel? Does this look familiar? And we said to have a license in this state, all 3 activities are required, right? So that's right. And when we talk about the transfer of real property, we're referring to LLBs. What are those activities? List, lease, buy, exchange, auction, negotiate, or sell. So if an owner of a property wants to rent their property out, they're not doing it for others, are they? They're doing it for themselves. So a real estate license is not required. You can manage your own property. Like we have the for sale by owner that doesn't need a license. So let's go ahead and call this owner the FRBO, the for rent by owner. And as long as they're doing it for themselves, they don't need a license. What if, and you guys do your heads one way or the other, what if you are asked to manage your parents' property, and in exchange, they're going to provide you, I don't know, free rent? Do you need a real estate license to manage your parents' property in exchange for free rent? And you can do your head one way or the other. It's your parents' property, you're managing it, and they're providing rent. Do you need a license? I would say yes, because you're not doing it for yourself. Even though they're your parents, you're not the owner of record, are you? Are you on the deed? No, your parents are. And you're doing it for some form of compensation. Compensation doesn't always come in the form of money. They may not be giving you X amount per month, but is free rent something of value? In this day and age, heck yeah, it is. My renters out there know that the struggle is real. So everybody good with that? All 3 activities are required. The formula is required. They're transfer of real property for others for compensation. And again, compensation isn't necessarily money. It's anything of value. So the property manager has to have an active, non-provisional, non-PB real estate license. The property manager connects with the owner. They work under a property management agreement. We're going to talk about the property management agreement in just a bit. When the owner of a property hires a real estate agent to be their property manager, we enter into a property management agreement. Why don't you guys tell me in a private chat? Let's get your private chats ready. Why don't you guys tell me in a private chat, when an owner hires a broker to be their property manager via a property management agreement, what duties does that broker owe the owner? What duties do you think the broker owes the owner? Look at you guys go. This does my heart good. Still going. You guys are awesome. The broker owes the owner OCAR. The owner is hiring the broker to perform a service using the property management agreement. That owner becomes our client. What do we owe our clients? OCAR. Most property management, residential property managers will not represent the tenant. Most of the time, I know there's exceptions to every rule, but most of the time, the owner and the property management have a client relationship. The tenant is their customer. Remember, our client gets OCAR, our customers get honesty, fairness, and the disclosure of material facts. It's an interesting relationship for the property manager because they are communicating so closely with the tenant. They're dealing with the tenant at least once a month to get rent, right? If the tenant has a problem, they're calling the property manager. If the tenant needs anything, they're calling the property manager. So the property manager really has to work to make sure that they're treating the tenant as a customer and the owner as an OCAR. They got to remember where their loyalty lies, always. Another private chat question. In property management, is the working with real estate agent disclosure required? You can tell me why or N, yes or no. In property management, is the working with real estate agent disclosure required? In property management, is the working with real estate agent disclosure required? And the answer to that question is no. Why? Working with real estate agent is only required for sales transactions, not lease. The property manager is not selling the property. The property manager is renting the property on behalf of the owner. Working with real estate agent is only required for sales transactions. A question comes in: as a property manager, if the owner states you cannot sell houses while working with them, is this the line with working with two firms under one bid? Could be. So if I may answer your question another way, try to make sure we're all good. Some real estate agents just do property management. Some real estate agents just do sales. Some will do both. And if you're going to do both, then you need to let your principals know, right? You need to let your principals know. A lot of firms may be involved in both. So it's just that disclosure, letting them know that you do for sale and for rent. We're going to talk a little bit more about that in just a second, because, and we'll bring this up in a second, but just think about this. What happens when the owner says, I'm done being an investor. Can you sell my investment properties? That's a different arrangement now. That's a different agreement now, right? Because the property management agreement, I'm just being hired to manage their property. Everybody with me? I'm not being hired to sell the property. So now we got to enter into a different agreement if the firm practices that. Guys, here's the deal. There's only one license in this state. There's not a separate license to be a property manager. There's not a separate license to be commercial or sales or anything like that. A license is a license, and you can do anything as long as the property is located in North Carolina. Good question comes in. Now, if you switch gears from lease to sale, now you need that working with real estate agent disclosure, right? Absolutely. When that investor calls you and says, now I want to sell, now it's a total different ballgame. Yep. So with the property management, the primary function of the property manager is to preserve the value of the investment property while generating income for the owner. What does the owner care about? The owner's an investor. What do investors want? Yeah, I see you guys. They want to make money, right? So the property manager has the duty of generating income for the owner. The property manager is a different relationship with the owner than a real estate or sales agent, I should say. First off, the relationship is a lot longer. You think a lot of time in sales, buyers and sellers are in and out of our lives so fast, right? Is it a 2-month transaction? I mean, think about the big picture of life. 2 months is not that long. Property management, we're trying to form a long-term relationship. You know, the property manager has authority. They have the ability to make decisions where the sales agent doesn't. Think about it. If you hire me to be your property manager and I have to call you for every single thing, we need new filters. Can I go get them? They didn't pay rent. What should I do? Da-da-da, da-da-da. The water heater blew up. What should I do? At some point, aren't you going to say, why the heck am I paying this person if they have to call me for every stinking thing? You guys with me? So there's authority, there's power. And we very well may say, okay, Julie, you have the authority to fix whatever needs to be fixed up to X amount. Don't bother me until it gets over X amount. Does that make sense to you guys? So with that being said, here's another private chat question for you guys. Is the relationship between the owner and the property manager that of a special agent, a general agent, or a universal agent? And you can respond SG or U. Special, general, or universal? The relationship between the property manager and the owner. Special, general. It's another throwback to unit. It's either unit 7 or 8. Special, general, or universal? And it looks like most of us are saying general. Why is it a general? Because we have some power to bind. We have some ability to make decisions. We have some authority. Remember, the universal is the unicorn. How often do you see a unicorn run around in the forest? Okay. Then the general, you have some ability to bind, some ability to make decisions. With the special, you have zero ability. The special is the relationship between the client and the sales agent. Questions? General agent and property manager, the relationship between property manager and the owner. So what are some functions of the property manager? Well, they market the property. Obviously, if the tenant moves out, the property manager needs to work really hard to get another tenant in, right? Because if we don't have a tenant, we're not collecting rent. If we're not collecting rent, nobody's making money. The owner's not making money. The property manager's not making money. So if the tenant moves out, they need to market the property. The property manager is usually responsible for budgeting and controlling expenses. So money coming in, paying the bills, maintenance, janitorial, management fees. They are going to go through the selection process of securing tenants, having tenants enter into the lease with the owner. They're going to handle the security deposit for the most part. They're going to collect rent. And then they need to report periodically to the owner. The owner deserves to know that their investment property is producing. Yes, can we all agree with that? The owner wants to see that their investments are making money. We're going to talk about some more of those reports in just a second. Some property managers are a large firm and they have employees. So they would be responsible, obviously, for their employees. Others may just be a one-man show. They do it all their own. It just depends. How many owners do they have? How many properties do they have to manage? I was talking to somebody this weekend, and you know, one of those stories, they had a friend who knew somebody that da-da-da. So anyway, this lady had recently passed away, and she passed with 300 investment properties. That's a lot. I said, good for her. You know, you all talk about mailbox money. That's all she did once a month, is walked out to her mailbox and went, oh, I have money. But she had a property manager. She passed away. The kids didn't want to deal with it. So they were in the process of selling all those investment properties. That's a great relationship. That's a long-term relationship. Everybody with me that you want with the owner. 300, y'all let that sink in for a second. That's 300 tenants, 300 rents, 300 heaters, 300 water heaters, furnaces. That's 300 roofs. That's a lot. Goodness. So if this is a very basic, very broad list of things that the property manager can do, again, we're going to talk a little bit more about these. Let's talk briefly about things that the property manager can't do. They cannot, should not be making capital improvements. They can advise the owner to make capital improvements. They can help the owner budget for capital improvements. But bottom line, they cannot perform the capital improvements. By the way, capital improvement is adding value. Painting a room is not a capital improvement. Finishing the unfinished basement is a capital improvement. Updating the bathroom, the kitchen, that's a capital improvement. The property manager cannot reinvest the owner's profits. That's their money. They can't pay the owner's taxes. The owner still owns the property, so they're responsible for property taxes. And they're not going to establish a depreciation schedule. Usually doing a depreciation schedule is the job of an accountant. So the owner may need to go seek advice from their accountant on doing that. Do you guys kind of see the theme in these things that the property managers can't do? This all has to do with the owner's money, doesn't it? So we help the owner make money, but once we put that money in their pocket, they need to decide what they're going to do with that. They're going to decide what they're going to do with their money. Again, I can offer advice, I can make suggestions, but I cannot do this for them. So the owner and the property manager enter into a property management agreement. I need everybody to stop writing for 1 second and listen to what I'm about to tell you. A property management agreement is an agency agreement. A property management agreement is an agency agreement. And as we've already established, once we enter into a property management agreement, the broker owes the owner OLCAR. As with our listing agreement, the property management agreement has to be in writing from the inception. You cannot have an oral relationship with an owner of a property. Everybody good with that? Oral agency is only allowed with buyers and tenants. We cannot promise the owner, may it be for sale or for rent, if we don't have a written agency agreement. The property management agreement establishes the authority of the property manager. It spells out what they are allowed to do, what their ability is, what their authority is. Remember, we just said I can make all repairs up to X amount. We have to agree on that X amount, the broker and the owner. What if we say $500? Julie, make any repair that's under $500. Anything over $500, now I need you to call me. That would be established in our authority, the property management agreement. One big difference between the property management agreement and our sales agency agreements, the property management agreement may allow for an automatic renewal. We're still going to have a specific beginning date and specific ending date, but we may allow for an automatic renewal. Let's face it. Let's say we enter into a property management agreement for 1 year. And at the end of the year, we decide we have a good relationship. I'm making you money. I'm keeping a happy tenant in place. It's taking care of the property. We may want to continue that relationship, and it can allow for an automatic renewal. A question comes in, is the client still the firm's client with the property management? In most cases, the property manager is the firm. In most cases, that's typically how they're designed. But yes, the relationship is with the firm. Yep. Questions or comments so far? So let's talk about some of the typical duties of the property manager. Well, one of the biggest things that they need to do is prepare a management plan. The owner and the property manager need to be involved in the management plan, how they're going to handle things, how we're going to make money. And some things that we may see in this management plan are the owner's objectives. What are their expectations? How much money do they want to make and when? How fast, how quickly? The property manager is going to perform a market analysis. They're going to help the owner understand what probable lease price could be, how much rent can we collect in this area, in this property. Property manager is very likely to do a CMA. They're not finding probable sales price. They would be finding probable lease price. Market analysis not just looks at the property itself, but it also looks at neighborhood trends, how desirable is the property? Is it close? What's the infrastructure? Is it close to highways or bus stops? And then the property manager is also going to study the specific property. Again, probably doing a CMA, probable lease price, to help the owner determine how much rent can we collect. The property manager is going to report the financials to the owner. Let them know what their money's doing. Let them know what their investment's doing. One financial report that they will provide is an operating budget. Okay. Operating budget is done in advance. Anytime you budget for something, you're looking at money in advance. You may sit down with your household budget the first of the year, and you may budget for the year. How can we take a vacation this year? How can we do birthday parties? How can we do Christmas, right? How can we afford to do things? That's no different than this operating budget. How can we pay the bills this year? How can we pay taxes and insurance and the typical bills that come with ownership? How can we save if we want to do an update or an upgrade or a capital improvement? So the budget is always done in advance. And we're going to try really hard to predict the money's coming in and the money's coming out this year. Hopefully we have a tenant in place making rent. So budgets are done in advance. Another report that the property manager may do with the owners, the cash flow report. How does the cash flow? Income, expenses, net cash flow, net operating income. It's not uncommon for the cash flow report to be a monthly report. And it shows the owner what's currently going on the property. It's like a snapshot of today. What's your financials today? As we said, these cash flow reports look at income, look at expenses. Income is all money coming in. It may not just be rent. Maybe you're collecting late fees. Maybe you have a storage unit that somebody's leasing. Maybe you have a vending machine on the premises. Income is all the money coming in. Expenses then are money going out. Fixed expenses remain constant whether you have a tenant in place or not. Taxes are always due. Do you think Forsyth County cares if the property's vacant or occupied and collecting? Absolutely not. Forsyth County wants their taxes every year, right? Homeowners insurance. Those are fixed expenses. Variable expenses may vary depending on whether or not you have a tenant in place. When a tenant moves out, there's generally work that has to be done to get the property ready for the next tenant. Yard work may be a variable expense. You're not have the landscapers out in the middle of the winter, but you got to plan for those expenses in the summer. Is anybody else's grass growing like, I can't control it. I walked out in my yard yesterday and it was about up to my shins. My guy's coming today. I'm very excited. I'm that neighbor right now. And I hate that. Get this taken care of today. But in the winter, you don't have to pay landscaping. So that's nice. Income and expenses. Look at, have you guys ever heard of a profit and loss statement? P&L is generally how we refer to profit and loss. It's rare that you hear profit and loss. So P&L reports is another financial report that the property manager can provide the owner. Profit looks at profit and loss. P&L looks at revenues and expenses. Bottom line, are you making money or are you losing money? And every month, every quarter, every year may be different. There's risks with investing. And investing in property is no exception. There are risks. At the end of the year, the property manager will generally look at a budget comparison statement. The budget comparison statement compares the actual results with the operating budget that we did at the beginning of the year. Remember, we sat down at the first of the year and we did an operating budget. Now here we are at the end of the year and we're doing our budget comparison statement, the actual results with what we predicted. And those actual results can help us prepare the operating budget for next year. If we were way off, for the good or the better, or the worse, the good or the bad. We can use that information to help us better do our operating budget next year. Questions on any of the reports that the property manager may do for the owner? So let's talk a little bit about investors, the owner's perspective through the owner's point of view. And one thing that the investor cares about is cash flow. You guys remember poor Violet? I think we actually switched that up and said poor Valerie. We have our potential gross income and we deducted our vacancy and collection losses to give our effective gross income. We deducted our operating expenses to get us net operating income. And when we looked at this formula in unit 17, at this point, we took the net operating income and we used the net operating income to help us determine value or the capitalization rate. Everybody with me so far? This is a nice little refresher. Everybody have this formula memorized? If not, put it on flashcard. So now when we talk about investors and cash flow, we're going to take this formula a step or two further. Remember we said when you're looking at net operating income, specifically operating expenses do not include debt service. Debt service is your principal and interest. Debt service is your principal and interest. So to help the investor determine cash flow, from this point, we're going to take our net operating income and now we're going to deduct our debt service. And when you deduct debt service from net operating income, you get before tax cash flow. Before tax cash flow tells the investor, how much money am I going to make before I do what? Before I pay taxes. Before tax cash flow, once you deduct your taxes, then the investor has after tax cash flow. After cash tax flow is the total amount of money left after everything's been paid. Could after tax cash flow be a negative? Yeah. Yeah. And guys, you know, don't get excited. It's not uncommon for investment properties, any kind of investment, to be in the negative at first. It takes time to grow. It takes time to build money. Now, what if you've been in the plus for years and years and years, then all of a sudden you're in the negative? Well, I mean, you got to ask questions. Did the economy change? Did taxes go up, right? I mean, there's a whole lot of factors that go into these things. Bottom line, big picture, the investor ultimately wants their after cash tax flow to be in the negative. I'm sorry, to be in the positive, not in the negative, to be in the positive, because that's a sign that they're making money. So before tax cash flow takes into consideration the debt service. After tax cash flow is once you've paid everything, including taxes. I don't think you'll see this new piece of the math, but we do need to understand what that is. Bless you. I know, allergies. I also worked in my yard for a couple hours yesterday, and I spent all night last night sneezing. It was really annoying. Some investment terms, investment characteristics. Investors look at leverage. Have you guys ever heard the expression, it takes money to make money? It takes money to make money. That's the idea of leverage. Sometimes the investor can make more money if they borrow money. Maybe they have the cash to purchase the property, but maybe they can leverage. Maybe they could use the borrowed money to help finance, to help leverage their investments. They may be able to stretch out their mortgage payments and these low payments over a long period of time that produce them a higher cash flow. So leverage is the idea of using money, particularly borrowed money from the lender, to make money. And then another investment term is something called equity buildup. First off, let's have a conversation about what equity is. Equity is your money that you have in your property. Equity is value minus debt. You guys, please write that down. That's part of the math that we're going to do in just a second. Equity is value minus debt. So the two pieces of equity. Equity looks at the value of the property, and it looks at how much you owe. What's your debt? Whatever's left is your money. It's the money that you have invested in your property. The three ways to build equity, then, we're getting ready to talk about these, but the three ways to build equity, two of those ways are about increasing value, and one of those ways is decreasing debt. So how do you build equity? Well, you can increase your value. A gain in value is called appreciation. We said last week that depreciation is a loss in value. So appreciation is a gain in value. You can also increase your value by doing capital improvements. Again, a capital improvement is adding value. Painting a room does not add value. Adding a room to the back of the house is a capital improvement. That adds value. So three ways to build equity. Two are about value. How can you increase your value? Appreciation or capital improvements. You can also build equity by decreasing your debt. How do you decrease your debt? Pay off your loan, pay your bills. Anytime you pay down that principal, you're paying the bank back. You pay the bank back, you're increasing. Again, we're going to do some equity math in just a bit. Questions so far? Let's go back to the property management duties. As we kind of mentioned, hinted on, one of the property manager's biggest duties is renting the property. If we don't have a tenant in place, nobody's making money. The property manager has to follow the North Carolina Residential Rental Agreement Act if it's a residential property. We talked about that in Unit 11. The property manager has to follow the Tenant Security Deposit Act, again, also discussed in Unit 11. Let me say this, make sure we're good. When the owner of a property hires a property manager, the broker is managing the property as if it were their own, right? They owe them old car, we're acting on their behalf. The property manager is responsible for establishing a rental schedule. We want to make sure we're collecting enough rent to pay the bills, pay the owner, pay me, pay everything. So the rental schedule should be enough to cover fixed expenses, variable expenses, and still provide a fair investment for the owner. Property manager, as we said, needs to market the property. Signs in the yard, internet, print media, word of mouth. That's one big difference of property management. Maybe word of mouth, networking, can find a tenant. Property manager is going to qualify and select tenants. Not only do they need to make sure that the tenants can pay, they can pull a credit report, make sure that the tenant has a good credit history. They can request employment verification. But the property manager also needs to make sure that the size, the space fits the tenant's needs. Make sure that the tenant can utilize this property to the best of their ability. When it comes to qualifying and selecting tenants, we're going to do Unit 19 today as well. Unit 19 is our fair housing unit. And one thing we're going to learn in fair housing, what you do for one, you do for all. We treat everybody the same. So if you're a property manager trying to find a tenant and you pull a credit report for one tenant, possible tenant, you need to pull a credit report for all possible tenants. Everybody with me? What you do for one, you do for all. You treat everybody the same. Property manager is responsible for collecting rent each month, making sure rent's been paid, or however, when it's due, I should say, collecting rent when it's due. And then they're responsible for the security deposits in accordance to the North Carolina Tenant Security Deposit Act. Because the property manager is a licensed agent, the property manager will have to have a trust account or an escrow account. They will manage that trust account. We're going to talk all about the trust account when we get into our license law and commission rule. Property manager wants to or needs to maintain the property. Any costs or repairs. What kind of agreement does the property manager have with the tenant? Am I going to come in once a quarter and change your furnace filters, for example? If you have a long-term tenant, sometimes tenants last for 15 years. At some point in those 15 years, you may need to do some kind of upgrade, some kind of maintenance on the property. Your book on page, I just want to point this out really quick. Your book on page 341 talks about 4 areas of maintenance that the property manager should consider. 341. So like preventative maintenance is regularly scheduled activities. It needs a fresh coat of paint every once in a while. You got to change the furnace filters every once in a while. Repair or corrective maintenance is actual repairs once something breaks. Routine maintenance is just your day-to-day operations. If there's common areas, for example, The property manager, the owner are responsible for the common areas. And then constructive maintenance, construction, maybe getting the space ready for a new tenant, maybe doing an update, doing an upgrade, remodeling the kitchen. So just as an FYI, the property manager needs to make sure that the tenant is not dealing with any environmental concerns. If there's any waste or hazard, it needs to be disposed of properly. Remember everything we talked about in Unit 20, all that scary stuff, asbestos and radon and lead-based paint. If there's an environmental concern, guys, the enforcement isn't going to call the property manager. They're not going to call the tenant. They're not going to call the property manager. They're going to call the owner of record. Is the owner going to be happy to get this phone call? Absolutely not. Your property manager is getting ready to get a nasty, nasty phone call, aren't they? Because they should be making sure that the tenant is not violating, and not just environmental concerns, but any rules. What if the property, for example, is in an HOA? If the tenant violates the HOA rules and regulations, again, the HOA isn't contacting the tenant, they're contacting the owner. So the property manager is making sure that the tenant follows all the rules, and that does include environmental. The property manager is also making sure that the broker themselves and the owner complies with Americans with Disabilities Act, if applicable. Americans with Disabilities Act pertains to the public accessing public places. ADA only applies to employers with 15 or more employees. 15 or more. So does ADA apply to all employers? All? No, only those with 15 or more employees. And the big picture of the ADA says that the public space must accommodate all the public. The big picture of ADA says everybody, regardless of their disability, should have the same access, the same ability to access the property as everybody else. ADA is not about the housing. ADA is about public spaces. We're going to talk about fair housing in our next unit, and we'll see ADA again. ADA requires employers to make accommodations or modifications to the public space to allow the public to access. An accommodation could be a change in the procedure. Maybe you put handicap parking spaces in your parking lot. Maybe you put Braille on your elevator buttons, for example. Those are accommodations. Modifications are changes to the building itself. If an older building, let's say, for example, an older commercial building is 2 stories and it was built before ADA. So that 2-story building was built without an elevator. ADA is not going to make the employer put an elevator in. They're going to require them to make accommodations. Although you couldn't get somebody, for example, in a wheelchair up to the 2nd floor, you could go down to them. So they're going to require accommodations. However, when the owner of that building does major repairs or renovations, now they're going to be required to do modifications. If they're requesting permits to rebuild or permits to do major renovations, now they're going to require major modifications. So they're not going to make you make any very expensive changes today, but they're also not going to approve permits. Does that make sense? Unless you have plans for modifications to be in compliance with ADA. We mentioned last week about pets versus service animals. ADA, the only breed that ADA recognizes currently is dogs. This is important because you may find old literature. They used to recognize miniature ponies, but they did away with that last February 2021. And so today, the only breed that ADA recognizes are dogs. Service animals are not pets. Service animals are to be treated like an extension with the person with the handicap. So let's say, for example, you own a Lowe's Hardware. Do you have 15 or more employees at Lowe's Hardware? Probably. So if somebody wants to come into Lowe's Hardware with their service animal, with their dog, you cannot deny them access. You can't ask a whole bunch of questions about what's wrong with you. You cannot do that. You allow them in. What if? What if? What if? What if the service animal comes in and starts acting up? If you guys are familiar with service animals, you know they are trained to act in a certain way. Service animals don't jump up and down on people, right? They're trained to service their owner. Do you allow an individual in with their service animal? And it makes me so sad, but do you think people take advantage of this? I'm sure they do. You could probably go to Amazon and get a vest for your dog and call them a service animal. Does that make them a service animal? No. So you get a vest, your dog goes into Lowe's and your dog starts acting up. They jump up and down on people. Maybe they piddle in aisle 4. If they're not acting like a service animal, then you can ask them to leave. Does that make sense? You can't deny them access, but if they start acting in a way that is not that of a service animal, then you can require them to leave. And it's also important that we understand that service animals and emotional support animals are 2 different things. Again, ADA only recognizes service animals, and the only breed that they recognize are dogs. I'll leave this. We'll go to break in just a second. But do you guys remember, I don't know how long ago it's been now, but the lady was trying to get her emotional support peacock on the plane with her. Do you guys remember that? And Delta had this big to-do. She made a big to-do about it. Emotional support peacock. Delta was in the right, because does ADA recognize peacocks? No, they only recognize, I think they ended up offering her some stuff just to get her to, but bottom line, Delta, like it or not, was in the right. They were complete compliance with ADA. Question comes in, don't they have a tag that goes on them to show that they're certified? I think service animals would have some kind of marking tag or vest or something to indicate that they're a service animal. Oh, somebody worked for an airline and people brought all sorts of animals. It is sad that people take advantage of this, but as an owner of a business of 15 or more employees, you need to know what you can and can't do. Again, American ADA is about the public spaces. Unit 19 is about fair housing. Fair housing is about the private unit. Okay, so think of ADA as picking up where federal fair housing leaves on. So we'll see ADA again when we get to fair housing. ADA is about the public spaces. Fair housing is about the unit, the dwelling. Fair housing does not have breed restrictions. It's only ADA that has breed restrictions for service animal. That's right. That's right, Becky. That's a good way to get himself. Question comes in, as a property manager, can you ask for service animal documentation? I don't think you can. You guys may know, I don't think you can. You got to be really careful about the questions you ask. I think you can only ask, do you have a disability? You can't ask what the disability is. Do you have a disability? And the other question you can ask is, does this dog provide a service for your disability? And if they say yes and yes, you have to allow them access. Careful about the questions that you ask. But you can ask me questions about property management duties, questions on property management duties. Again, we'll see ADA again. We'll compare it to fair housing. in Unit 19. Could they get in trouble for lying? I don't know. I don't know. I mean, I don't know the answer to that. I don't know if you would call the cops. I'm not sure. Could you call the cop? Yeah, you can call the cops, but what can they do? I don't know. Okay, so Carlene works in property management. She says you can request a reasonable accommodation form to be completed and send a verification to the doctor listed. You can get in trouble if the dog bites someone. So yeah, but again, just be careful about the questions you ask. Okay. All right, let's take a break. Let's take 10. We come back. We're almost done with Unit 12 already, this part, and then we'll get into some math after break. So let's take 10. All right. We're back. So let me take attendance. And like I said, we're really close to wrapping up Unit 12, and then we get to do a little bit of math. And thank you. I've already taken attendance. So yes, if you're just coming back, make sure you tell me in the chat. Okay, so again, the property manager and the owner are responsible for complying with ADA if the property, if the employer has 15 or more employees. All public accommodations, public spaces. Yep, and we're back. We've taken attendance, so make sure you let me know you're back. Another thing that the property manager needs to consider is risk management. The property manager has to ask themselves, what will happen if something goes wrong? Is something going to go wrong? More than likely, at some point, things happen, right? So for risk management, the property manager can try to help avoid risk if at all possible. They can avoid it by removing the source, just taking the risk away. Let's say, for example, a pool that's not used often. It might not be worth having the pool. There might be too much a risk. You can, close it up, cement it up, and avoid it. The property manager and the owner could retain the risk, maybe put a bigger deductible on their insurance policy, help protect themselves in the event something bad happens. They can control it, so you can do preventative measures to control it. Maybe put a fence up around the pool area so people can't jump in the pool in the middle of the night. Kids like to do that sometimes. Or they could transfer the risk. Instead of putting a large deductible on their policy, they could take out an insurance policy just for that risk. So there's several options. Again, you still can never predict everything that's going to go wrong, but the property manager does need to try to prepare for things. Help. Again, it's all about preserving the investment and putting money in the investor's pocket. And I was not kidding when I said we were almost done. Unit 12. So there's key terms. Again, I got some math to do, so don't get too excited. Welcome back. So there's key terms at the beginning on page 331, key point review 346, and then the student quiz. You're not going to be tested on it, but I do want to point out the math concepts on page 345. Frequently how property managers are paid. Remember, sales agents are paid typically a percentage of the sales price. Property managers are typically paid a percentage of rent collected. It might be a flat fee, but the math concepts just goes over commissions, how you can get paid as a property management. And that's not the math that we're getting ready to do. I have one more thing to say about Unit 12. Often after the exam, you guys come back to me and say, there were more questions than what I expected to see from Unit 12. I think they're not hard. We saw a lot of green stars in Unit 12, right? So we don't need to go in depth. We don't need to, we only spent like a whole hour on it. So we don't need, but you need a basic understanding of the things that we talked about. I think Unit 12 is one of the less studied units. And I think that's the case for a couple of reasons. One, because we just saw a bunch of green stars, so how important can it be, right? But I also think that Unit 12 is one of the less studied units because the good majority of you are interested in sales. And that's what you want to focus on. You don't want to worry about property management. Remember those goals. Before you can do sales, we got to get you through the test. What's included in your test? Property management. So my whole point of that is don't ignore unit 12. Okay. Lots of green stars. We don't need to go in a lot of detail, but yes, you are going to have test questions on unit 12. How was that? Everybody just make a note. Unit 12. Question comes in, are responsibilities the same for short-term rental property management versus long-term like vacation rentals? Yeah, I would say so. Responsibilities are the same because you're still managing, whether you're doing a long-term for 5 years or you're doing a vacation where you get, 40, 50 tenants a year, right? You're still preserving the property and trying to make money for the investor. So if you've gone down to the beach, you might get a beach house for a week. I mean, there's 51 other people, right, renting the house that year as well. So there might be, you got to get, somebody, again, anytime one tenant leaves, you got to get it ready for the next tenant to come. So it might be a little bit more work from week to week to week. Sometimes kids go to the beach and destroy the beach house, destroy the Airbnb. They like to do that. Party responsibly when you go to the beach. That's the moral. You can party responsibly and still have a good time. All right, so I'm going to stop sharing just for 1 second. And we're going to do some investors math. And you really don't have a good place for this math in your book. I'll show you in just a minute where you can find this in your book. But never fear, you guys should know by now that I got practice for you. So when we get done, I'll show you and learn test pass where you can find some practice. I will also say that this is our last big math. Is that exciting? Yay. I got one more. I don't even want to say math because we're not really doing the math, but I got one more formula for you guys after this math. So this is our last big math. The end is in sight, y'all. You see the light at the end of the tunnel? You see it? It's there. So before we talk about the different types of investment math, investor math, let's just do a quick refresh, kind of pave the road for what we're going to see. You guys remember the T-Bar 101? Somebody said the light at the end of the tunnel better not be a train. That's so funny because that's one of my dad's dad jokes. It's good to know when the light at the end of the tunnel isn't a train. So T-Bar 101, we've been working with the T-Bar. Let me get some thumbs up if I've gotten you. That's my goal each class. I want to convert you to T-Bar fans. Look at all those thumbs. If your thumb's not up, you're memorizing formulas, and that's fine too. I don't care how you get the right answer. I really don't. Just get the right answer. So for my T-Bar fans, basically what we've been dealing with is the part over the whole. And for the most part, what we've been dealing with so far, the part is a smaller number. So when we're talking about T-Bar, for example, which is smaller, commission or sales price? Well, unfortunately for us, it's commission, right? So the commission would go on top, sales price on the bottom. That's kind of the way we've been running up until this point. We're getting ready to do math where the number on top is going to be bigger than the whole. And when would the part be bigger than the whole? When the percentage is more than 100. Up until this point, our percentage has been 100 or less, which makes the part smaller than the whole. But in just a minute, I'm going to introduce you guys to a concept, an idea of where the part is the larger number. And the reason being is because the percentage is more than 100. So let's say, for example, a home has increased in value by 15% since it was last sold for $218,000. What is its new value? Well, there's two different ways we can solve this problem. The first way, we can take the current value times 15%. And again, we're just introducing. So just sit back and take it all in for a second. We're getting ready to get in the good stuff. So if I take 218,000 times 15%, I get 32,700. Now that I know that, I can take 218,000 plus 32,700. And then I get my value today of 250,700. I increased by 15%. So this approach, I found that 15% increase, and then I added it to the value. We could also, two ways, we could also look at a T-bar to solve these kinds of problems. My value is 218,000, and I'm going to see an increase of 15%, or in T-bar verbiage, we're going to see an increase of 115%. We're going to explain more, talk a little bit more about this. So what would its new value be? Well, in this case, I could take the value of 218,000 times 115% and jump straight to my 250,700. Again, this is just where we're heading. Taking that 100 and making it more than 100%, taking that part, because now my number on top is bigger than my number on bottom left. Yes, rate or percent always goes in the bottom right. Y'all take the guesswork out of that. Rate or percent always goes in the bottom right. In this case, in what we just did right here with 115,000, we looked at 100% as my starting off point. So when we talk about profit and loss for just a second, when you have profit, your profit is more than 100. If you have a loss, it's going to be less than 100. If you can think of 100 as your starting off point, 100% would be your investment. You walked in the door with the 100%. You add to it, you have a profit. You deduct, you have a loss. So just to get us warmed up, we'll see this little graph again. Just to get us warmed up, why don't you guys take a few minutes, tell me in a private chat what Jody's income is this year. Tell me in a private chat. Give about 30 more seconds and then we'll talk about it. Okay. So we see a math problem. What do we do first? Just read it. Just read it. Put your pencil down. Sit on your hands if you have to, but just read the problem. Jody is a sales agent who earned $122,000 in sales commission last year. Unfortunately, she has seen a decrease in her income this year. What is her income this year? Give me a thumbs up or a thumbs down. Did Jody make more than or less than 122,000 this year? She made less than, right? Because she had a decrease. So you have 4 choices in front of you, A, B, C, or D. If any of your answer choices are more than 122,000, you can rule that out before you ever pick up a calculator, right? Yes, because we've already said, we all said that she had less than 122. The more you can rule out answer choices, the better chance you have of getting it right. So before you ever pick up a calculator, see if there's any answer choices less than 122,000. I have everybody so far. We're really studying these problems sometimes before we ever pick up a calculator, right? See if there's things we can't do to help ourselves out. So we know she has something less than. There's 2 ways you can solve this. We can either take 122,000 times 7%, gives me 8,540. That shows me how much she lost. So now if I take her 122,000 minus what she lost, how much did she make this year? She made $113,460, less than. She had a 7% decrease. The other way you could have solved this problem would have been by using the T-bar. You have your 122,000. And then if you start with 100 as your starting off point, the number we're going to use is 93%. 100 is my starting off point. 122,000 times 93%, still get that same result. 113,460. Okay. So this is our little warm up. Just get you guys going. Is your coffee flowing? Mountain Dew, whatever your morning vice is. It's easy to doubt yourself, isn't it? That's where practice helps, I think, too. How am I getting this? So 1 of 2 ways. Are you a T-bar fan? Where'd you go? You a T-bar fan? Yes. Okay. So with the T-bar, the number that I use, my 122,000, if I think of 100 as my starting off point, 100 is what I invested. 100 is what I have in it. So if I think of 100 as my starting off point, I had a 7% decrease, which means I'm going to start my 100 and I'm going to go, I have a loss. So I'm going to take 100 minus 7 for the T-bar to get 93%. Up down line still means multiply. So I take 122,000 times 93%. This year, her income was $113,460. Still nothing to sneeze at, right? But it's not as much as the 122,000. Well, we can. That's your other choice that I have right here, 122,000. You could do that as well. Yep. Figure out what that 7% is. Remember, you guys, there's more than one way to get to them all. Now, I can't show you every single way. So if you got 113,460, did you do good? You did good. Question came in, if it increased, will we multiply by 107? Yep, because now we would add to the 100%. Yep. Yeah, did I hear something?
Yeah, I was just going to touch on that because I noticed the prior one, you had put 117%, and this one you kind of didn't.
Because the prior one, I'm going to go back for 1 second, because the prior one was an increase. So I took my 100% and I added 2 by 15. So increase versus decrease. Yep. Increase, we're gonna have more than 100. Profit more than 100. Decrease or a loss is gonna be less than 100. Okay. Have another question? Okay. Investor math. Start with 100 as your starting off point. Yep, and that's what we mean here. 100 is where you start. You either add to 100 for a profit or you deduct from 100 with a loss. But you start with 100. So let's see what we got. Let's look at some actual investment math and see what we got. And let's start with profit and loss first. Profit and loss investor math. Let you guys jot down the T-bar, the formula, if you will, and then we'll talk about it. Every single question on both of your exams are multiple choice. So profit or loss looks at two variables. Well, it looks at three. Y'all take the guesswork out of this one. Where does the percentage go? Bottom right. Julie says the break percent always goes bottom right. Guys, I don't have this information in the book. We have to go off book to do this math. It's investor math. So now we're dealing with two variables. Now we have the amount made as part of the amount paid. The amount paid is going to be the investor's original cost. What did they pay for the property? Everybody with me? When you bought the property back in the day, how much did you pay for it? That's your amount paid. Your amount made is how much you made. Let's say, for example, I give you $100. I give you $100. There you go. And in return, you give me 125. Tell me in a chat, how much did I make? If I gave you 100 and you gave me back 125, how much did I make? Yeah. I made $25. Yes, because the 100 of that was my original investment. So my amount made is always going to be the difference. And what did you sell it for? Sold versus pay, right? It's going to be the difference in what I sold it for versus what I paid for it. So my amount made is the difference in what I sold it for. So I give you 100, you give me back 125. I did not make $125. I made 25. Everybody with me so far? That's the amount made. So let's work one together, and then I got one for you guys to do on your own. So Rachel buys a property for $38,000 and sells it for $62,000. What is her percent of profit? In these cases, in these problems, your percent of profit is going to be your X, because percent goes where? Percent goes in the bottom right. What was her original cost? What did she pay for the property? She paid, yeah, $38,000. Rachel buys a property for $38,000. How much did she make? Well, she sold it for $62,000. She paid $38,000. So how much did she make? 62,000 minus 38. is 24. So her amount made is $24,000. That fourth line still means divide. So you take the amount made divided by the amount paid, and you get on your calculator 0.631, and I'm just going to round here. And when I convert that to a percent, I get 63.16%. Your calculator gives you a rate. You convert a rate to a percentage by moving the decimal over 2 places. Amount made is part of amount paid. Questions? Amount made is part of amount paid. It's okay. Now we know, right? All right, your turn. Tell me in a private chat. You got 30 more seconds, then we'll talk about it. All right, let's see what we got. So you buy a property for 72,000 and then sell it for 69,000. What is your percent of loss? Again, do you need the problem to tell you you have a loss? You bought it for 72 and you sold it for 69. You have a loss here, right? Right? You sold it for less than what you paid for it. We know we have a loss. Problem wants to know what's our percent of loss. My X is my percent. That's what I'm solving for. What goes on the bottom is my amount paid. How much did I pay for this property? Back in the day, I spent 72,000 on it. I turn around and sell it for 69,000. So the number that goes on top is the difference of the two. My amount made or loss is the difference of the two. So 72,000 minus 69,000 gives me a loss of 3,000. That fourth line means divide. 3,000 divided by 72,000 gives me 0.0417, or you can move your decimal over 2 places and have a loss of 4.17%. You have a loss of 4.17%. Questions? Amount made is part of amount paid. Amount made is the difference in what you sold it for versus what you bought it for. Percentage, I take the rate on my calculator and I move my decimal over 2 places to the right. Whether or not your problem will tell you if it wants you to round or not. Again, you guys, let's please understand, your test is not going to look like this. They're not going to do that to you. I'm saying the same thing 4 different ways, right? We're saying the same thing 4 different ways. So do they want you to round your test? Your answer choices are going to reflect rounding. Do they want you to do a percentage? Your answer choices are going to reflect doing a percentage. Is everybody with me? I get so worried that you guys get so worried about rounding. If you can look at 4.16666 and see 4.17, can you see that on your test? The 3,000, I found the difference. This is my amount made. What did I pay for it versus what I sold it for? If you got the right answer doing it your way, then great, great. So the 3,000 is what I paid for it minus what I sold it for, my amount made. Other questions on this one? So if you make a profit, you're adding to 72,000. If you had a profit, you would sell it for more than 72,000. Your amount made would be the difference in what you sold it for versus what you paid for it. That's the number on top, is the difference in what you bought it for versus what you sold it for. Amount made, or in this case, an amount loss. Okay. I got practice for you guys, don't worry. Remember that math workbook I showed you guys a couple weeks ago? There's some of this in here as well. How many of you started looking through that math workbook? Looks like I need to remind you where that math workbook is. The other gift. Okay.
The T-bar, learning the T-bar was the best thing.
Oh, thank you for saying that. I love the T-bar. I call the T-bar Julie proof. Like, I can't even mess it up. Because I think once you get it, you know what goes where. I pay my bills every month due with the T-bar. Are you kidding me? How much do I have coming in versus how much do I have to have going out? What percentage is left for Julie, if any? I'm a revolving door, y'all. Y'all with me? Money coming in, money going out. And here we go. All right. Another tool that investors use is looking at present value or original value to find your percentage of the seller's cost. Present value is what it's worth today. Original value is what it was worth back in the day. Maybe when you bought it, for example. By studying what it's worth today versus what the original value is, what it was worth back in the day, that's going to help you determine the percentage of seller's cost. The seller's cost sets the original value as 100%. If you have a profit, you added to your original value. If you have a loss, you deduct it from your original value. These are the problems that we're going to use 100 as our starting off point. The 100% is your original value. What did you have in it? You either add to it and have a profit, you deduct from it and have a loss. Your investment is your 100%. Is that not showing up? Can you guys see this, the 100% here? Oh, I get what you're saying. I'm sorry. I understand. I'm going back for 1 second. Okay. So again, when we talk about present value, original value, what you put into it is 100%. You're either adding to it more than 100% for a profit, or you're deducting from it less than 100 for a loss. So again, let's do one together. A home listed for $285,000 and sold for $275,000. What gave the seller a 10% profit over the seller's cost? What was the seller's cost? First off, can we identify the distractor pretty quickly? When we're talking about money, do I care for what it was listed for? No, that tells us absolutely nothing, doesn't it? What do we care about? We care about what somebody was willing to pay for it. So the list price in this one is our distractor. You have, let's see, sold it for its present value, sold it for today, 275. What was the seller's cost, the original cost back in the day? And then to find our rate or percent, if we think of 100 as our starting off point, when you have a 10% profit, we're going to take 100 and add to it, right? Because we have a profit. So when I take 100 and I add to it, I get 110%. See how we started with 100,000? I started with 100, I had a profit, so I added that 10% profit. Back fourth line still means divide. So you take 275,000, divide it by 110%. What was the original cost? I paid 250,000 for it. I had a 10% profit. I sold it for 275. Profit and loss. Present value is part of original value. Questions? This math is not in the book, but it is in the syllabus. So why are we covering it? Because the Real Estate Commission says we need to cover everything that's in the syllabus. All right, here's one for you guys. Private chat, what you think the answer is. Remember to use 100 as your starting off point. Use 100 as your starting off point, and you have a loss. You're going to take 100 and do what? You about 30 more seconds. So Stacy invested in a mountain cabin a few years ago, made no improvements to the property. She just sold the cabin for $80,640, losing 16% of her investment. What did the cabin cost Stacy? So let's just think for a second. Just put your pencil down and just think for a second. She had a loss. She sold it for $80,640. Does that mean she bought it for more than or less than $80,640? Show me in your hand. She bought it for more than $80,640, right? Because that's what she sold it for at a loss. So right away, you know, your answer choice should be more than $80,640. Is everybody with me? If you can just look at the problem for a second and think about what it's saying, you might be able to rule out an answer choice. So if any of your answer choices are less than $80,640, you know, you can rule that out, right? She had to pay more than what she sold it for to have a loss. Do I have everybody? Okay. So now if we look at our present value as part of our original value, she just sold it. That's our present value of $80,640. We're trying to find what she paid for it back in the day, her original cost, and she had a 16% loss. So if I think of 100 as my starting off point, and I say 100 minus 16, I'm going this way in the line because she had a loss. 100 minus 16 gives me 84. So 84% is the percentage of seller's cost that we're looking for there. Back fourth line still means divide. So you take 80,640, divide it by 84%, and we find out that she bought it for $96,000.
You know what I've been doing wrong? I've been taking the 80,640, subtracting it by 16%, then adding. That's why I keep getting it wrong. Instead of subtracting 100.
100. So you could do that 80,640 times 16% and then go back and add that to, or 80,640, you know, plus 16%, right? So you got to find, you know, how that, or subtract it from, I should say, minus 16%. Again, either you're a fan of the T-bar or you're not. I don't care. It makes no difference to me. Questions, other questions on this one? Again, you guys, use multiple choice. I don't know much about life, but this is what I know about a multiple choice exam. You got 4 answers looking at you. You know, one of them has to be the right answer, right? This isn't just for the math. This is for any of it. One of them has to be the right answer. So if you can eliminate something, you've increased your chances of getting that question right. Does that make sense? Where are my Vegas fans? You get a 25% chance of getting it right. You eliminate one, and now you have a 33% chance of getting it right. Would you rather go to Vegas with a 25% odds or a 33% odd? I'd rather go to Vegas. I'd like a little bit more than 33, but it's still better than 25. Everybody with me? So just sometimes looking at the answer choices to determine, see if you can't rule anything out. Okay. All right. Let's take a break. We come back, we're going to do some equity math. All right. We're back. Let's take attendance. And I got one more piece of investor math, and then I'm going to show you guys where we got practice for you. I also show you really quick where this is in the book. So it is in the book, but you're not going to be impressed with where it is. So one more piece of investors math. And the last thing we need to discuss is equity increase or equity loss. Either you have an increase in equity or you have a loss in equity. Why don't you guys tell me in a private chat? We just learned a little over an hour ago how to find equity. Go back to your notes and tell me in a private chat, how do I find equity? How do we find equity? You can go back to your notes while you're learning. Whitney, your camera's not on. There you are. Just want to make sure. So going back to our notes, the formula for equity, when I say the word formula, you guys should hear flashcard. So after class, take you a formula, take you a flashcard, and you want to take value minus debt, and that equals equity. How do you find equity? Value minus debt. Everybody have this written down now. You have it written down again. What the heck? Write it down 3 times on a flashcard. How do you memorize it? Write it down. Repetition. I think I talked about this before, but did anybody, it couldn't have just been me, but anybody else ever get in trouble in school and you had to go to the blackboard or the whiteboard and write? Mine was always, I will not talk in class. And I had to write that 100 times. So I will not throw spit wads. I will not, whatever it is that you did that got yourself in trouble and you had to write it 100 times. Why did they make you write that 100 times other than to be mean? But the other reason why is repetition. If you wrote, I will not talk in class 100 times, are you going to think before you talk in class again? Your hand might even phantom cramp a little bit, right? From writing that. That's what we mean by repetition. If you write it down over and over and over and over again, it's more likely to stick. Okay, everybody good? Everybody got the formula for equity? Value minus debt. So to look at our equity increase or loss, we're going to look at our T-bar. Our original equity goes in the bottom left. Percent always goes in the bottom right. And the number on top is the change in equity. This formula is very similar to the amount made as part of amount paid. Remember, amount made, we had to find the change, we had to find the difference, and we compared it to what we pay for it. We're doing the same thing here. We're finding the change in equity, the different, your new equity versus your old equity. And you're comparing that to your original equity. So the change in equity as part of your original equity gives you your percent of equity increase. Do you think the problem is going to give you equity? That'd be way too easy, wouldn't it? So they're going to give you the information that you need to find equity. How do you find equity? Move your mouse with me. Let's all say it together. Value minus debt. So they're going to give you old value, old debt. They're going to give you new value, new debt, and you got to find the equity. So let's look at one together. A property is valued today at $50,000, has an outstanding loan of $45,000. Later, the property is valued at $60,000 and the loan is paid down to $38,000. What is the percentage of equity increase? I've read the problem, and the first thing I want to do is identify my X. What am I solving for? So now let's study equity. And let's start with looking at our original equity. What was our equity originally? So the property is valued, value, at $50,000, and it has a loan of $45,000. Value minus debt gives you original equity of $5,000. Now let's look at new equity. Later, the property is valued at $60,000 value and has debt, her loan is paid down to $38,000. So my new equity today, I have $22,000. My original equity was $5,000. I had appreciation. I increased my value and I paid down my debt. So I decreased my debt. Remember, the three things for equity buildup all revolve around increasing your value and decreasing your debt. The number that goes on top is the difference in my equities. So I'm going to take my new equity minus my original equity to get a difference. My change in equity of $17,000. Back fourth line still means divide. Take 17,000, divide it by 5,000. And on my calculator, I get 3.4, which is the rate. Move your decimal over 2 places to get a change in equity increase of 340%. You convert a rate to a decimal by moving your decimal over 2 places to the right. So what's your percentage of equity increase? Old equity is original equity. Yep. Back in the day, equity. So we had a percent of equity increase of 340%. The trick to these is first finding equity. Once you find equity, we take the change of equity and divide it by the original equity. Questions? Okay, your turn. Private chat, what you think the percent of equity increases? You got 30 more seconds. So McKinsey bought a home 5 years ago for 220,000 with a loan of 176,000. Now the home is worth 260,000 and her loan is paid down to 162,000. What is her percent of equity increase? Read the problem, identify your X first. What are you solving for? Now, let's look first at our original equity. She bought the home 5 years ago. The value 5 years ago was 220,000. 5 years ago, she had a loan or debt of 176,000. Value minus debt gives us equity of $44,000. Original equity of $44,000. So 220. 44,000. That was her original equity. What did she have 5 years ago when she bought? Questions on original equity. Value minus debt 5 years ago. Now, the home is worth 260. She had appreciation or capital improvement, and she has paid her loan down to 162,000. So to find new equity, you take the difference, value minus debt. And today, her equity is 98,000. Again, you guys, equity is your money that you have in the property. So you build equity the longer you own it, right? Appreciates either way, you're paying down the debt. So originally 5 years ago, she had 44,000. Today she has 98,000. The number that goes on top is the difference in the equities. So we can take her new equity and her original equity, and we find a change in equity of $54,000. Yep, $54,000 is her change. Again, it's the amount made as part of the amount paid. We're saying the same thing. We're just using equity instead of that. But if you can get that concept, you can get both of these problems, which I think is where practice. Is there any way you can rename yourself? I'm not sure if you can or not. Back fourth line means divide. So you take 54,000, divide it by 44,000, and on your calculator, you get a number that looks something like this. So we have a rate of 1.23 or 1.227, saying the same thing. We move that decimal over 2 places to the right to get a percentage of equity of 123%. Doesn't it feel good when your little light bulb kicks on? I like it. Again, the trick to these, you first have to find equity. You got to find original equity. You have to find new equity. Once you do that, you do your change in equity, divide it by your original equity, and you get a percent of equity increase. Questions? Let's see, the last part again with the change in equity, we found the difference in equity. So we had the new equity of 98,000 and we had the original equity of 44,000. So 98 minus 44 gives me a change in equity of 54,000. That's the number that goes on top, the change in equity. 54,000 divided by 44,000 gives me a change in equity of 123%. Had a request to go back. I'm not working this problem again, but the answer was 340%. Remember, we're recording too. So you guys can go through and rewatch this recording and work it at your own pace. So while the book doesn't give you the math concepts for this, it does give you some practice. So the math that we just worked, you can find some problems on page 474, which is actually unit 18. And then those 50 problems in the back of the book, these are the numbers that relate to the math that we just did. And I'm getting ready to show you guys some things in Learn, Test, Pass as well. So there's 50 problems in the back of the book. There's your profit and loss, percentage of equity increase, present value is part of original value. A couple of you saying you're making careless mistakes. You just met, you guys are so hard on yourself. Y'all just met this, what, 45 minutes ago? Right? Give yourself a break. How do you get good at it? How do you stop making careless mistakes? Practice, practice, practice. And guys, please, above all, remember the math alone can't fail you. So please, please, please don't spend the next 2 weeks doing nothing but math. Did I just say ignore the math and don't touch it at all? No, use the math, some of the math to your advantage, but you got to focus more on other stuff. Fair enough? All right, so other than these page numbers, where do you find this explanation in your book? This is mind-blowing to me. Did you guys, were you aware when you look on the inside cover of your book, both the front cover and the back cover, there are formulas? Did you guys know that? I didn't know that. I never look on the inside cover. Are you kidding me? But sure enough, there's some math formulas. So if you look in the inside front cover, let's look at the inside front cover. The second column near the bottom, it says percent of equity increase. That's what they give you on equity buildup. Gee, thanks. Go to the inside of the back cover, and the second column is profit and loss. That's what they give you. You got it? Here's a test question on it, go. So it is in your book. Technically it is in your book. But they don't do a good job of explaining it, do you? You can't just throw the formula at you and say, here you go. So you do have some practice. Everybody have these numbers written down, some practice here. Point out a couple things in Learn, Test, Pass. First off, the unit 12 material, unit 11 and 12, I'm sorry, is all kind of lumped together. So unit 11 and 12 is together. Here's some profit and loss and equity math. Here's some extra problems for you guys in here. And of course, I have the solutions, but studying the solutions doesn't do you any good. There they are. So this is 11-12 material and Learn, Test, Pass. Here's the PowerPoint, the profit and loss PowerPoint that we just went through. And again, we are recording, so you can go back and watch the recording as well. Also, please remember, back up here under Unit 21, there's this math workbook. If you haven't started going through the math workbook yet, I really think you should, because it gives you extra practice and it gives you another way to explain things. So there's equity math in here, profit and loss. And the other thing, make sure the first page of the math workbook is actually the gift. You want to know what math you can expect to see on your state exam? Here you go. You want to know what math you can expect to see on my exam? Here you go. So to help you guys prepare for your various tests, can use the math workbook. Questions or comments? I know some of you guys think math is a 4-letter word. Shouldn't be saying out loud in public. What does it say? This is what the math you can expect to see on my exam. This is the math you can expect to see on your state exam. What do you want to focus on right now? This or this? Smaller goals. Yes? Before you can get to this math, you have to first focus on this math. Does that help? Does everybody appreciate what I'm doing for you here? I mean, all right. The other thing in unit 11 and 12, I want to point out a couple things here, just for you to have the information to look at. Here is our exclusive property management agreement. This is our agency agreement. Again, we're not going to go through this like we did the listing agreement, the buyer's agency agreement. But what I have done is gone through and highlighted the terms that's discussed in the syllabus. So if you just kind of want to peruse this, just kind of focus on the highlighted terms. That's exclusive property management agreement. This is your agency agreement. And then I've also provided a couple brochures from the Real Estate Commission. So they provide these Q&A brochures, which I do like because I do think they help explain it. So in the unit 11 and 12, there's the Q&A on tenant security deposits. For those of you that are a landlord now, you definitely may want to look at this because things are going to change when you get your license. So you want to check this out. And then here's the Q&A on renting residential real estate. Again, these were written for the consumer, but I think they're good for you guys to help you better wrap your brain around this. So supplement stuff and learn, test, pass, just to help you better understand. I feel like the more different ways we can expose you the information, the easier it is to stick. Fair enough? What questions or comments do I have from units 11 and 12? Okay. While you guys are formulating questions or comments, I'm going to stop sharing just for 1 second. And we are getting into unit 19. Unit 19 starts on page 476. Unit 19 is our fair housing unit. And unit 19 is not just important for your exam. Unit 19 is also very important in your real estate career. You want to get yourself in trouble faster than anything. The quickest thing to get you in trouble with the Real Estate Commission, violate fair housing. I don't know of anything that'll get you in trouble faster. Not only important that we understand fair housing for your exam, but we also need to understand fair housing in real life too. So unit 19, by the way, April, the National Association of Realtors has deemed April as Fair Housing Month. So it's always good, you know, about once a month, once a year, we get a good kind of refresher. There's some great information, some great resources in the National Association of Realtors. So once you guys get licensed and you join NAR, you're going to have so much information, so much resources to help you make sure that you're properly handling fair housing. Guys, here's the deal with fair housing. Fair housing is not here for us to agree with or disagree with. Fair housing is what it is. This is not your personal opinion. You want to know what your personal opinion matters in fair housing? Absolutely nothing. Fair housing applies to housing, and it's really important that we understand. So with that being said, in this unit, We're going to talk about the Civil Rights Act of 1866 that eventually led to Fair Housing Act that we know today. We're going to talk about how that came to be. We're going to define the classes of protected people, the protected classes, I should say. We're going to talk about federal law and state law. And then we're going to talk about how fair housing is enforced, both on the federal level and the state level. So let's start first with equal opportunity in housing. First off, the word housing tells us that this is the dwelling. This is where people live. Fair housing is about the residential dwelling. ADA is the public spaces, the public accommodations. We do need to understand that housing is about the private dwelling. ADA is public spaces. And what equal opportunity in housing does, big picture, fair housing, equal opportunity in housing, both say anybody, regardless of their protected class, should have the right to live wherever they want, as long as they have the financial means. That's the big picture. Everybody should have the right to live wherever they want, as long as they're within their financial means. Real estate agents are responsible for complying with fair housing. Apartment management companies need to comply with fair housing. Lending organizations, lenders need to comply with their equal opportunity. We'll talk about those in a second. Builders, developers, basically anybody involved in a real estate transaction, because we're working with the public. So anybody involved in the real estate transaction needs to comply with fair housing. Failure to comply with fair housing could not also get you sued. It could get you fined. It could get you in violation on the federal and the state level. But again, I don't know of a quicker way to get yourself in trouble with the North Carolina Real Estate Commission than to violate fair housing. So there's numerous of consequences if violating fair housing. So let's go back in time and let's talk first about how fair housing is today as we know it. So let's have a little history lesson. Did you guys know you were getting a history lesson? Fair housing actually started in the Civil Rights Act of 1866. Tell me in a chat, what was going on in 1866? That's not a typo. What was going on in 1866? What was happening? Yeah, the Civil War was ending, slavery was abolished. And from that, the Civil Rights Act of 1866 became to be. And what the Civil Rights Act of 1866 says is that you cannot discriminate on the basis of race. Race is one of our protected classes. We will define all of the protected classes in just a minute. So please don't ask me right now what race is. We will talk about race in just a second. Civil Rights Act of 1866 still applies today. What is that? 40, 50, 160 years later, give or take. And it still applies today. Civil Rights Act of 1866 is one of the oldest acts that we have that's still around. And what makes this act so unique is this just doesn't apply just to housing. The Civil Rights Act of 1866, no exemptions allowed. You cannot discriminate on the basis of race for housing, for commercial, for employment, a pickup game of dodgeball. We can never discriminate on the basis of race, no exceptions allowed. You can never discriminate on the basis of race. And that's thanks to our Civil Rights Act of 1866. So we went, let's fast forward now, from 1866 to 1968, almost 100 years later. In 1968, the Civil Rights Act of 1866 reframed, reformatted, if you will, and became the Civil Rights Act of 1968, also known as Fair Housing. And in 1968, we added to race and now include color, religion, and national origin. Federal Fair Housing Civil Rights Act of 1968 says we cannot discriminate in housing on race, color, religion, and national origin. And again, we're going to define all the protected classes in just a second. I do think you guys need to know these years and what classes came to be protected in the year. And I'll explain why in just a second. So in 1968, we added on to race and included color, religion, and national origin. Fast forward to 1974. In 1974, we picked up sex as a protected class. What was happening in the early 70s? Women's lib. We can now vote. We can get a credit card, right? And so now they decided for housing that sex was a protected class. As of February of 2021, February of last year, we evolved sex again. And as of February of 2021, now included under sex is sexual orientation and gender identity. Sexual orientation and gender identity are now included under fair housing under the protected class of sex. Fast forward one more time to 1988. Y'all, this was not that long ago. Fast forward one more time to 1988, and we picked up handicap, disability condition, and familial status. And I will explain what familial status means in just a second. Again, I think you need to know these dates. I would not put it past them on your test, for example, to say the year is 1972. A woman applies for an apartment. She feels like she's rejected because she's a female. In 1972, could she be denied an apartment application because she's a female? Yeah, because sex was not a protected class. So in addition to the protected classes, I really do think you guys should know the years. The year that they came to be. There is a great chart in your book. Once we make an edit, I got to make one quick edit. So everybody look with me to page 477. 477. You guys see where it says Civil Rights Act of 1866 and race and color are marked? Cross out color. The only thing protected in the Civil Rights Act of 1866 was race. The only thing protected in the Civil Rights Act of 1866 was race. 1966, we reformatted, we reframed it, became fair housing as we know it today. In addition to race, we picked up color, religion, and national origin. In 74, we picked up sex. In 88, we picked up handicap, disability, and familial status. The other thing you have in the chart on page 477 is Equal Credit Opportunity Act of 1974. That's the lender's house, the lender's equal opportunity. So we talked about this back in units 14 and 15. But what I like about it is it can show us what's protected under fair housing versus what's protected under the Equal Credit Opportunity Act. So race, color, religion, national origin, sex. The lenders have a protected class of age, assuming that the applicant is 18 years old. The lenders have a protected class of marital status. You can't discriminate on somebody not being married. The lenders can't. And then the lenders also have a protected class of public assistance income. So like this chart, did everybody make the edit? Everybody crossed out color in 1866, okay. But I think this chart does a good job of showing us, again, the difference in our protected classes versus the lender's protected classes, but also what years they came to be. In addition to knowing the years, you need to have an understanding of who the protected classes are. And one way we can remember the protected classes is to remember Fred's corn. Some instructors do fresh corn. I like the picture better with Fred's corn. The difference in Fred's corn and fresh corn is if you're using disability or handicap. If you're using handicap, then you can spell out fresh. If you're using Fred's, you can use out disability. So just know disability and handicap status are usually used interchangeably. So let's break this down and talk about what each of the protected classes mean. Familia status, the F in fresh. Familia status is about the children. Familia status is about anybody under the age of 18 and pregnant women. I think familia status comes more into play in for rent than it does for sale. Landlords, owners, property managers can't deny a family from renting their home. Even though they have 5 kids all under the age of 8, and those kids are going to come through and terrorize the home and put purple crayon on the walls and, you know, spill nail polish and everything else that kids do to destroy the home. The owner of a property, the landlord, cannot discriminate against a family. Familia status does not protect adults. Familia status protects the kids under the age of 18, and that does include pregnant women. The R in Fred's corn, the first R in Fred's corn and Fred's is race. Race is referring to the group of people that an individual was born into or has affiliated with their whole lives. Either who the individual was born into or has affiliated with, that defines our race. The E in Fred corn is not a protected class. It's just a filler so I could spell Fred's. Okay, E is not a protected class. So equal rights for all, just a filler. Disability or handicap condition is any physical or mental impairment that limits one or more of life's major activities. Disability or handicap is referring to a physical or a mental impairment that limits one or more of life's major activities. Let's go back to Unit 7 for 1 second. You guys remember in Unit 7, we defined material facts. We talked about things that are material facts. And we also talked about things that are not material facts. And we were talking about things that are not material facts. We talked about stigmatized properties. And we had an exception to those stigmatized properties. An exception to the stigmatized properties. If you're ever asked, did somebody live in this home that had AIDS or HIV? You guys remember this? What's your answer? Can you answer that question? No. Your answer is always, federal fair housing prohibits me from answering that. Because those with AIDS or HIV are protected under disability handicap conditions. So again, you can be asked, did somebody die in this house? Was somebody ever murdered in this house? Whatever. You can choose to answer it or not. If you're ever asked, did somebody ever live in this home that had AIDS or HIV? Your answer is always, federal fair housing prohibits me from answering that. It's a violation under disability handicap. The S in Fred's is sex, an individual's gender. the gender they were born with, and or the gender they identify today is protected class. And now, as of last February, also included is sexual orientation and gender identity. The C in corn stands for color. Color is just referring to the actual color of a person's skin. Color is referring to the actual color of a person's skin. The O in corn is not a protected class. It's just a filler, so I can spell corn. So opportunity for all. The R in corn, our second R, is religion. An individual's spiritual beliefs. Religion is referring to an individual's spiritual beliefs. And then the N is national origin. National origin refers to the country in which an individual is born or where their direct ancestors came from. So national origin refers to the country in which an individual was born or which country that their ancestors derived from. These are your protected classes. Federal Fair Housing protected classes. Guys, here's the deal about fair housing. Fair housing does not say, these are the protected classes, don't you say anything bad about them. Fair housing says, these are the protected classes, don't you say anything at all. We can talk about the property, the location, the amenities. We cannot talk about the people. They're protected classes, which means we can't, even if you think you're saying something good, you're still having a conversation about the people. Now we're going to talk a little bit more about familial status and handicap in just a bit when we come back from break. I think it's important too that we also understand that these are the protected classes. If you have a class that's not on this list, can you discriminate? Can you discriminate a class on this? Like, say, for example, political affiliation. Is political affiliation a protected class? No. So you know what? Discriminate away. They're not a protected class. Now, I'm not telling you to discriminate. I'm just telling you what fair housing says. About 5 years ago, roughly 5 years ago, and we're not getting a political debate, this is just a story. About 5 years ago, my husband sent me a home for sale advertised in California. And the remarks said, Trump supporters not welcome. Did they violate fair housing? No. So could they say that? Yeah. Did they probably limit their pool of buyers? Sure, because I'm sure even Trump supporters are like, God, I don't want to work with this person. They seem difficult. In the eyes of fair housing, though, was there anything wrong with that ad? Trump supporters not welcome? No, because political affiliation is not a protected class. You guys see what we're doing here? Let's say you have an apartment for rent and you don't want to rent to real estate agents because you know we don't have steady income. We only get paid when it closes. Could you put in your ad, real estate agents need not apply? Can you discriminate against an employment, against an occupation? Yeah, discriminate away. You can only not discriminate. I know I'm hitting on moral compasses here, aren't I? But you can only, per the eyes of fair housing, you can only not discriminate against the protected classes. Again, you guys, your test is not going to ask you what your discrimination is. Your test is going to ask you what fair housing says the protected classes are. Does that make sense to everybody? Political affiliation, not a protected class. Occupation, not a protected class. Everybody with me? These are the only protected classes recognized by fair housing. Again, the important thing that we understand, I cannot talk about the people that fall under the protected classes. You may have a discussion with your consumer, with your buyer or seller, for example, that may say, I don't want to live near, fill in the blank of a protected class, or I want to live near, fill in a blank of the protected class. When that comes up, we need to try to get the conversation back to the property, back to the amenities. I can't pull you into or out of a neighborhood based on the protected classes. I can get you into a neighborhood that has the amenities that you're looking for. I can get you into a neighborhood that has the features, maybe infrastructure, transportation, grocery store. I can get you in those. We cannot get you in or out of a neighborhood based on the people. I'm going to say in sales, what comes up with familia status in sales, buyers will look at you and say, I want a neighborhood where little Johnny has friends to play with. I want a neighborhood with kids, so little Johnny has somebody to play with. Can you find me a neighborhood that has kids? I can't have that discussion with them. First off, I can't guarantee that little Johnny can make friends with the neighbors, right? Maybe little Johnny's hard to get along with and nobody likes him or wants to hang out with him. I don't know. I'm not making those promises. But having a conversation about the kids and the family, excuse me, in the neighborhood is a violation of familia status. So what do I do when they want somewhere for little Johnny? Let's talk about schools. Let's look at what school little Johnny will attend. Is there a nearby playground? Is there a softball field or something? You guys see what I'm saying? We can talk about the amenities, about the features, but we can't talk about the kids in the neighborhood. Fair housing also says, and I like this about fair housing. Fair housing says, guys, just in general, part of our job is to help educate the public. And when it comes to fair housing, this is one of the biggest places that we can educate the public. And fair housing says, look, this is our rule. Put this back on us. You don't have to defend it. You don't have to explain it. This is our rule. We'll make you follow it, of course. Question comes in, what if a person wants to look for a house that's close to their church? Can I do a radius search from the church? Can I say what, within a mile or half a mile? Sure. A church would be an amenity, right? I cannot advertise the property is next door to the United Methodist Church, right? Because now we're hitting on religion. But is a church an amenity nearby? Maybe the person doesn't want to live next door to the church because they're trying to leave their house at noon every Sunday, right? And they can't get in and out of the driveway. So we can talk about the amenities. We can talk about the features. We can talk about the neighborhood. We cannot talk about the people. And that, remember, big picture of fair housing, big picture. Everybody, regardless of their protected class, should have the right to live wherever they choose, as long as it's within their financial means. That's fair housing. That's the simplest way I can break that down. So let's go ahead, take our break. We'll come back. We'll talk more about fair housing and how we can work with the protected classes. Way back. I'm going to take an attendance. When it comes to federal fair housing, federal fair housing is enforced by a division of HUD. HUD stands for our Housing and Urban Development. One thing that HUD provides us with, again, a big part of our job anyway, is to help educate the public. And when it comes to fair housing, we spend time educating the public. And one thing that HUD does is provide us with a poster to have in our offices to let consumers know that we don't discriminate, to let consumers know that we abide by equal opportunity in housing. You have a sample of that poster in your book on page 478. Understand the individual doesn't have to hang the poster, but the poster should be in each real estate firm, lending firm, new homes community, model home, builders, developers, anybody involved in the real estate transaction. And we should have this poster somewhere where the consumers can see it. Letting the consumers know that we don't discriminate. As a matter of fact, HUD feels so strongly about this poster, they say failure to hang the poster on its face could be discrimination. Failure to put the poster up could be a violation. You could say that you're discriminating because you're not telling the consumers that you're not discriminating. Another thing I like, and I got some good resources for you guys in Learn Test Pass as well. I'll show you, if not today, I'll show you those on Thursday. Another thing I like about your book in Unit 19, there's lots of in practice things. And I think the in practice things kind of help us wrap our brains around this information. So for example, on page 479, there's Fair Housing Act restrictions, things that are prohibited, and examples. I think just looking at the examples help you further understand this. So pay attention to the in practice, to the various things in your book. And again, I got some stuff in Learn Test Pass. If we don't finish this up today, it'll be very first thing on Thursday. We'll talk about that in just a second. 479 over to 480, we kind of have some expanded definitions. Just some further explanations of things that we've talked about to make sure we're good. First off, when we talk about housing, we're referring to the dwelling, the space that is meant for occupancy. Remember, opportunity in housing, fair housing, equal credit opportunity, that's all about the housing. ADA is about the public. If you're in let's say you're property manager of a large apartment complex, are you dealing with both? Are you dealing with fair housing and ADA? Maybe you have a playground and a parking lot, common areas. Are you dealing with both? As long as your company is 15 or more employees, you're going to have ADA for the public split spaces and fair housing for the dwelling. Does that make sense to everybody? Fair housing is about the unit, the dwelling. ADA is for the public accommodations. Your book talks a little bit more about familial status. Again, we're referring to the children and the pregnant women. I do think in sales, where you see familial status is buyers will ask you, are there kids that live in this neighborhood? I can't answer that. And fair housing says it's okay to look at them and say, I'm not allowed to answer that because those kids are protected under familial status under fair housing. But when they do want to know of kids nearby, I can help them get to what's really important. What do you want to know? I can talk to you. I can get you the resources you need to look up the schools. We can drive down the road and see a playground or a park. Does that make sense to you guys? I can't tell you if there's kids in this neighborhood. Guys, remember, we're having our buyers drive by the house periodically anyway, different times of the day, on the weekends. So we're having them drive by anyway. Help them find the amenities nearby, parks, schools, playgrounds, etc. The bigger, in my opinion, the bigger place that familial status becomes an issue is for rental properties. A landlord can't deny an applicant because they have kids. Some people have this mentality that, you know, kids are going to destroy things. They're going to tear things up. Like I said, they're going to put purple crayon on the walls. The landlord, the property manager specifically, cannot discriminate against an applicant because they have children. I also, as the property manager or the sales agent, can't not show you available units because I'm worried about your kids' safety. For example, let's say there's an apartment building and it's 15 stories, and a family comes in and fills out an application to rent the unit available on the 15th floor. Can I decide that it's not safe for kids to be on the balcony on the 15th floor? Can I make that decision? No, I can't deny. Well, I'm doing it for your best interest to protect your kids because I don't want them to have an incident and fall off the balcony. That's a violation of familial status. Everybody with me? If the 15th floor apartment is available and an applicant comes in with children, I run them through the same credit check, the same process. Remember, what you do for one, you do for all. So all of those applicants are run through the same process. Which one you choose, that's up to your policy. Maybe your owner has a policy in place. Are you looking for a certain credit score and a certain employment income? That's all details. But I can't tell you, you can't rent out this 15th floor unit because you have children. With handicap and disability conditions, again, when it comes to for rent, I think this is the bigger concern. For sale, I'll sell you a house anywhere, right? The concern comes in for rent. And when it comes to handicap or disability status, the landlord cannot deny the tenant from making reasonable accommodations to the unit. If you have a tenant in a wheelchair, for example, can I say, no, you can't build a ramp? As the landlord, absolutely not. Can I tell them that they can't lower the kitchen cabinets or put a bar in the shower, for example? Landlords have to allow, under handicap disability, have to allow tenants to make reasonable accommodations to the unit while they're living there. Now, the landlord can require the tenant to pay for it, and the landlord can require the tenant to put it back at the end of their tenancy. We can work these into the lease. We can work great arrangements, but the landlord can't look at the tenant and say, no, you can't do it. Ramps, bars, lower cabinets, whatever. I remember my great grandma, God love her. She was like 98 years old when we lost her. And she was, to say she was deaf was an understatement. She had the highest hearing aids turned up as high as they could go. And you're still sitting there yelling at her, you know, I love you, Grammy, you know. She couldn't hear for nothing. Her phone, her landline was hooked up to the electrical of the apartment. So when her phone rang, it was like an event. The lights flashed, the siren went. I mean, it was an event. The rest of us are hitting the deck because we didn't know what was going on. And she's like, oh, you know, my phone's ringing. That, and I don't know how all that worked, but somehow that was an accommodation that she made in her apartment. So she knew when her phone was ringing because she couldn't hear it. She had a little box on her phone too that translated the voice to text, you know, so she could read what the other person was saying. She couldn't be told no, that she couldn't do that. Does that make sense to you guys? At the end of her tenancy, I'm not sure how it was put back. Again, that's got to be in the lease. If it needs to be put back at the end of the tenancy, that's got to be an agreement between the tenant and the landlord.
Can they?
Yep. Yeah.
Can they make the landlord put it like, let's say if they need the rail to go down the house because of the wheelchair, can they make the landlord do that? Or
the landlord doesn't have to actually do it. The landlord can make the tenant do it and pay for it. The landlord can't say, no, you can't. That's the landlord's responsibility. They have to allow these reasonable accommodations for handicap disability. Yep. And like I said, they can have a provision at the end of the lease that says, when this lease is over, you need to remove the ramp or, you know, whatever the accommodation is. The other thing I want to point out in your books, the in practice on page 480, just making mental FYI note here. Individuals that are current users of controlled, illegal, or illegal substances are not protected under handicap. However, those that are in treatment, those that are in rehab are considered protected classes under handicap disability. You guys see that in practice on page 480? There are some exceptions to fair housing. There are some exceptions to the rule. And when we talk about federal fair housing, an exception is a sale or rental of a single family home is exempt for someone that does not own more than 3 homes at a time. In other words, investors are not exempt. So who might be exempt in this scenario? The for sale by owner, the for rent by owner. As long as they don't have more than 3 units, they don't have to follow fair housing. Can they? Well, of course they can. But do they have to? No. Fair housing is never exempt when a real estate agent gets involved. Once you hire an agent or a property manager for sale or for rent, once an agent's involved, we're never allowed, the owner, the buyer, whomever is never allowed to discriminate. Once the agent gets, does everybody hear what I'm saying? Once the real estate agent gets involved in the transaction, discrimination is not allowed. And nobody, I don't care who you are, nobody can ever advertise their discrimination. So let's say you're a for rent by owner. You have one building, 1 unit to rent, 1 house, 1 unit. I may choose, well, not me because I'm licensed, but you may choose to not allow a man to rent that unit. You can't advertise females only or men need not apply. You guys see what I'm saying? I can choose not to let a male rent it, but I can't advertise that discrimination. Again, once an agent gets involved, no discrimination is ever allowed. Other exemptions from federal fair housing, you can choose if you can you ask me that question in a different way, make sure I understand it. If you want to rent a 1 to 4 dwelling and you occupy one of the units. You as the owner that's occupying one of the units can choose who you want to live in the other 3 in this case, for example. Owner occupied 1 to 4. Some properties are owned by religious organizations. Think about a parsonage, for example. Those properties can choose who uses. The church, for example, that religious organization can choose who uses the property that they own. Sometimes properties are owned by private clubs. Again, they can exempt, they can choose who would use that structure, that house or apartment or whatever. And then there's an exemption for housing for older persons. This is housing, maybe community, apartment complex, housing community, whatever. But this is designed specifically for people that are 62 years or older. And what they say is, if you're not 62 years or older, you can't live here. And what I need everybody to understand is the only thing that we're exempting in this case is children. This is an exemption to the familia status. Even though we can dictate how old you need to be to live here, we still can't say anything about race, color, religion, sex, national origin, etc. The only exemption to this exemption, it's exempt from familia status. And there is plenty of housing. Housing for older persons, those 62, it's designed, it was built for that, not even retirement, later in life community, later in life living. Can the grandkids come visit this weekend? Of course they can. Can they move in? No, because it's housing for older person. Everybody with me? It's exempt from familia status. So fair housing, the Department of HUD that handles fair housing, Office of Fair Housing and Equal Opportunity. This is who enforces federal fair housing. If anybody ever has a complaint, felt that they were violated because they were a member of a protected class, they can file a complaint to the Office of Fair Housing, Equal Opportunity. It will launch an investigation. They'll want to see documentation. They'll want to have conversations with both parties to determine if a violation of fair housing happened. The complainant has 1 year to file the complaint. So after the offense, after the incident, they have up to 1 year to file the complaint. Fines can run up. You may look at 10,000, for example, for the first offense. I don't know that we need to know this, but it's all in here. Page 482, 25,000 for the second offense and $50,000 or more. A lot of it's going to depend on if it comes in a private lawsuit by fair housing, or if the complainant just takes you straight to court, civil, criminal penalties. And remember what we said, a violation of fair housing will also result in a disciplinary action of the North Carolina Real Estate Commission. Did you guys hear what I said? I did not just say it may result in a disciplinary action. If you are found guilty of violating fair housing, it will result in a disciplinary action from the North Carolina Real Estate Commission. So not only are you being fined and sued, you don't have a real estate license anymore. You guys with me? Is it worth it to you? I don't think so. You need to be aware of how you're practicing, what you're doing when you're out there working with the consumers, when you're out there working with the public. So we've been talking so far about federal fair housing. Okay, everybody with me? Federal fair housing applies to everybody, all states, entire country. North Carolina also has our own fair housing. So we have federal fair housing and you have North Carolina fair housing. Y'all want the good news? The good news. The protected classes in North Carolina fair housing are the same as the protected classes for federal fair housing. There are other states that have additional protected classes. North Carolina is not one of them. Our protected classes align with federal fair housing. The differences are some of the exceptions. Remember we said an exemption for federal fair housing is when the home is owned by someone that doesn't own more than 3 homes, for example, the FSBO or the FRBO. North Carolina housing says, those are not exempt. So in the state of North Carolina, can a for sale by owner discriminate? Can a for rent by owner discriminate? Not per state. You need to understand, you need to know federal allows it, state does not. Anytime, I don't care what you're talking about, anytime you have a conflict of rules like this, the stricter of the two will prevail. So which one's stricter? I think the state. So again, I ask you, does that make some of you feel better? You really don't like it earlier when I tell you for sale by owners can discriminate. But now guess what? Now, according to state fair housing, can a for sale by owner discriminate? No. By the way, North Carolina adopted their fair housing in 1983. I don't know that you need to know this date, but just know, again, it's not that old. 1983 was not that long ago. And if you do not remember 1983 or we're not around in 1983, please don't tell me that. I don't want to hear it. Just nod your head politely and agree with me, okay? 1983 was not that long ago. All right, thank you. Another difference between federal and state. Federal allows a rental exemption only if the owner lives in a unit. State will allow an exemption if the owner or their family member live in a unit. And I don't know how direct that is. Are we talking about immediate family? Or are we talking about, I don't know how far back that goes. But again, the stricter the two will prevail. So in the state of North Carolina, which one wins out on these rules? It's the federal. Federal allows only if the owner. So is state going to prevail in this case? No. Federal will win. Federal will prevail. Again, understanding what both exemptions are and then comparing the two. The other difference in North Carolina fair housing that doesn't apply in federal fair housing. Federal fair housing doesn't have this as a protected class, but North Carolina has an exemption on single-sex dormitories. All of our college dorms, our military barracks down in Fayetteville, those are exempt from state fair housing. Federal law doesn't have this exemption, so the stricter of the two is North Carolina. Enforcement of the North Carolina fair housing comes from the North Carolina Human Relations Commissions. Again, the complainant has 1 year to file a complaint. So if you feel violated against because of your protected class with housing, you can either go file a complaint on the state level or you can file a complaint on the federal level. Probably what's going to happen when you file a complaint on one level, it's going to get pushed up or down to the other one. So if you file a complaint to state, they very well may get the federal involved. If you file a complaint to the federal, they very well may get the state involved. All those fines and penalties and real estate commission. We're getting everybody involved. See why I want you guys to understand this? Whatever, you need to pass the test, blah, blah, blah. This is your day-to-day lives, you guys. You want to work with the public, pretty much everybody you work with is one form of protected classes. You guys understand? You guys with me? It's so important that not only we understand it for your exam, and this is why, because some of these topics can get sensitive. Some of these topics can get very, very touchy for some. And this is why the National Association of Realtors has dedicated April as Fair Housing Month, because we all need refreshers. We need to make sure that we're conducting our day-to-day business in accordance with fair housing. Do you have any questions so far? So back to fair housing, there's some prohibited practices, things that nobody is allowed to do. The first prohibited practice we have is block busting. Block busting is also known as panic peddling. When you're talking about block busting, you're talking about the sellers or the owner. The idea of block busting is encouraging people to sell or rent by claiming the entry of a protected class into the neighborhood. You cannot encourage somebody to sell or rent their home by claiming the entry of a protected class into the neighborhood. You're insinuating that there's some sort of negative impact on the property, the neighborhood, etc. Any mention, no matter how subtle it is, any mention that the neighborhood is undergoing changes could be a violation of block busting. You may not come out and say you should sell because you can't imply it either. If block busting and panic peddling are about the seller, then steering, I can spell, steering and channeling are about the buyer. I can't steer a buyer into or away from a neighborhood because of the presence or absence of a protected class, of a member of the protected class. I can't steer my buyers into or away from a neighborhood because of the presence or absence of a protected class. If they want to live in this neighborhood, what's fair housing say? Anybody, regardless of their protected class, should have the right to live wherever they want, as long as it's within their financial means. And I can't say, well, why don't you look at this neighborhood because the neighbors look more like you, or the neighbors practice religion like you, or the neighbors do more like you. That's steering, that's channeling. I'm pointing them into this neighborhood. So block busting is when you're dealing with sellers and owners. Steering is when you're dealing with buyers and tenants. You guys have that? Depends on who you're talking to, if you're block busting or steering. As we said before, you can never advertise your discrimination. Advertising your discrimination is a prohibited practice. Advertising is not only print media, it also applies to internet, social media. Anywhere that you promote a property, get that information out. Redlining is a lender prohibited practice. Redlining is a practice that lenders used to do many, many years ago, and this blows my mind. Lenders would have a map of the city on the wall. They would take the map of whatever city, put it on the wall, and then they would take their red marker and they would actually walk up to the map and say, we're not going to originate a loan here, here, or here. And they would actually circle certain areas of the city that they would not originate a loan. Yeah, that's not allowed today. If you're denied a loan, your debt to income ratio doesn't shake out. You cannot be denied a loan because of the location, because of the neighborhood. Again, page 486. There's some of HUD's advertising guidelines. And I tell you guys, this has already been updated since this book has been published. You guys see HUD's advertising guidelines? HUD is starting to suggest, National Association of Realtors is starting to suggest that we refrain from saying master bedroom, master suite. The suggestion comes into place now that we say owner's suite, for example. But this gives you just kind of an idea of things that are or are not permitted at the date of publication. I'll tell you guys within, just within the last 6 months, fair housing and advertising has taken a really big stance. So in the Triad MLS, just January 1st of this year, this is how we continue to evolve. We continue to grow as we learn. So January 1st this year, Triad MLS, thank you, primary bedroom. That was the other word I was looking for. Primary bedroom, owner suite, that kind of thing. So January 1st, Triad MLS has implemented within their software that it looks for words that could be a violation of fair housing. And if a word is flagged, it's not telling me I can't use the word. It's just telling me, warning, you need to make sure that you're using this word appropriately. For example, they implemented this in January, probably January or February. I was putting a new listing in, it was a new construction. And in my public remarks, I talked about the white cabinets. And MLS flagged that. They didn't tell me I couldn't use it. They just said, make sure that you're using this word appropriately. Is it appropriate to talk about white cabinets? Of course it is. Can I talk about white people or white neighborhood? No. And that's what fair housing was. Caution, it didn't deny me from putting the listing in. It just gave me a warning for me to go back and verify, for me to double check and make sure that I'm using the word. And HUD has a whole list. Last time I got my hands on this list, it was like 26 pages long of just words that could be potential violations. So I'm kind of glad that MLS has adopted that software to help me identify those words. So I don't have to know those 26 pages of words. I mean, that's a lot of words. Again, you guys, I can talk about and describe the property, the neighborhood, the amenities nearby all day long. We cannot talk about the people. Comments, questions?
Can you give us another example about blockbusting? To make sure I get it.
Yeah, so blockbusting is about the seller. So I can't go to seller and say, oh, wow, you know, the entry of a protected class, maybe religion or color or race. You know, there's, you know, somebody of this religion that lives down the street. So because this religion lives down the street, it's safe to say that others may move in. And if others may move in, then you're going to want to go ahead and sell before that religion takes over the neighborhood. I can't encourage the seller to sell or rent because of members of the protected class. Is that, I mean, that's demographics. You can pull that information, but I can't encourage them to leave. That's that panic peddling. Have you guys ever heard of something? It was back in the, I want to say the 40s or 50s, maybe even the 60s. Time gets away from me. Back in the 50s or 60s, I think there was something called white flight. And people in suburbs were being encouraged to move, being encouraged to leave because of the entry of a protected class. White flight is not allowed today. Blockbusting, that kind of thing, is not allowed. There you go. Blockbusting is push them out. Steering is pushing them in. Blockbusting is getting the seller out, the owner out. Steering is getting the buyer in. You can say in your ad, you can say there's a church nearby, but you would probably get flagged if you said United Methodist Church nearby. Because what you're implying in that ad is that you want United Methodist to buy that house because it's close to United Methodist Church. Can I hide a church? I'm not David Copperfield, right? I can't hide a church, but I'm not going to advertise or promote. Does that make sense to you guys? They can drive around and see there's church right there, right? They can go to Google Maps. God, y'all have your buyers go to Google Maps and zoom out. They can learn all sorts of things about their surrounding areas. Again, I think for agents, our biggest violation, unintentional, but violation nonetheless, is advertising. And I think that's why this software from MLS, and I don't know about other MLSs, I can only speak for Triad MLS, but I think that's where that software is helpful. It didn't tell me I couldn't advertise white cabinets. It just said, warning, make sure you're using that word right. North Carolina also has laws in relation to sexual harassment. There are laws in North Carolina against sexual harassment to protect the prospective tenant by the landlord. Now, there's other sexual harassment laws and employment, all that other good things, but specifically, we're talking about to protect the tenant. Verbal harassment could be suggestive comments, jokes about a gender. Nonverbal could be whistling, maybe obscene gestures. And then physical harassment is inappropriate touching. Tenants are protected in North Carolina. They can't be felt victim of sexual harassment by their landlord. So let's bring this home. What's this mean for us? What does this mean for brokers? Well, here's the deal, and this is why this is so important. Real estate agents can be found guilty of discrimination even if there was no intent. Maybe you didn't mean to discriminate, but somebody in your presence felt discriminated against. Let's say, for example, you're doing an open house on Sunday and you have groups of people coming in. Everybody that walks in your door, you say, hey, thanks for coming. I got cookies and a sign-up sheet in the kitchen. Please, put your name on my registry. Let me know if you have any questions. You say this to everybody. But you're talking to a buyer when an individual comes in and you don't tell the individual to sign your registry. But that individual hears you telling everybody else to sign your registry. Could that individual feel like they're discriminated against? Could they feel like you're treating them differently than everybody else? I didn't mean to. I was busy and I wasn't paying attention. But it's not about me, is it? Did I make the individual feel discriminated against because I had everybody else sign my registry but them? Yes, and that's what we mean. Even though you have no intent, you could still be found guilty of discrimination. What you do for one, you do for all. Y'all have that written down yet? What you do for one, you do for all. Treat everybody the same. If you don't want one person to not sign your registry, then you don't tell anybody to sign your registry. You can't pick and choose who signs your registry. Can't pick and choose who gets a cookie. What you do for one, you do for all. As we mentioned, HUD has their advertising guidelines. That's at 26 pages, which again, thank you, Triad MLS, for now having some words flagged. The National Association of Realtors suggests that firms display the sign, the equal credit opportunity poster would accommodate this. Just a sign flat out saying discrimination is against company policy. We do not discriminate in this office. It's a violation of federal and state laws. I know this says pre-printed forms, but translate that to our agency agreements. Remember when we looked at our agency agreements, they all have that non-discrimination clause. We'll look at it first thing Thursday morning again. We'll pull a random agency agreement and look at it. But all of our pre-printed forms, all of our pre-printed agency agreements say, all caps and in bold, we will not discriminate against the protected classes. And then it goes on to list those protected classes. That's required in our agency agreements, our pre-printed forms. Again, I think Unit 19 does a really good job of giving us examples. So make yourself a note to look at the in practice on page 489. let us make sure that we are good with the difference in American with Disability and fair housing. Fair housing is about the housing. Fair housing is about the dwelling, the unit, the placement for occupancy. ADA is about public accommodations. When the employer has how many more employees? 15 or more employees, they have to abide by ADA. So let's just take a property manager, for example. Let's say you're a property manager of a large apartment complex, 150 units. And within this apartment complex, and you have 16 employees, within this apartment complex, not only do you have 150 units, but you also have a pool, a clubhouse, a playground. Does that apartment manager, does that property manager have to abide by both ADA and fair housing? They have 16 employees. Do they have to abide by both? Yeah, because you have both housing, you have dwelling, the unit itself, and you have public spaces, public accommodations. I've talked to, and who is it Carlene is my property manager. I've had property managers in class before, and federal fair housing and ADA has been known to send secret shoppers. They will send people into the leasing office. They will have people call to make sure that you're following, fair housing and ADA. You guys know what I mean by secret shoppers? They used to go out to the restaurants. I don't know if they still do or not, but they're sending people. And I had a lady once in my class, and she worked for the property manager that like 150 units. My poor girl came into class some days just frazzled, especially about the time that rent was due. You could just see, poor thing, you know, that's a day right there. But she told us, she said they call their main office a lot just to try to catch, just to make sure that everybody's following fair housing and ADA. And if you violate, you know, she said they're not, you know, they may pop you on the wrist, suggest you get more training, but offense after offense after offense, now they might start issuing fines. But it's all to make sure that their consumer is properly treated. Do you think they could do it for a sales situation? Walk into a real estate office, a sales office? Sure, absolutely. ADA is public accommodations when the employer has 15 or more employees. Fair housing is for housing the dwelling. As we mentioned earlier, and again, back in Unit 15, the lenders have to follow Equal Credit Opportunity Act. You guys see the word credit? That should trigger a lender law for you. Again, the protected classes for the lenders, some of them are similar, but they do have some differences. Race, color, religion, national origin, and sex are similar. Lenders don't have familial status, for example, because those under 18 years old aren't applying for a home loan. So lenders don't have familial status as a protected class. They don't have handicap, disability. That goes back to that chart. I love that chart that we looked at the beginning of Unit 19. I think it does a really good job of just a side-by-side comparison. So this is the lenders protected classes. The last little piece in Unit 19, stepping away from fair housing for just a second, talking about our code of ethics. Once you join the National Association of Realtors, you become a realtor. Once you're a realtor, in addition to real estate license law and commission rule, real estate commission license law and commission rule, you also have a code of ethics from the National Association of Realtors. When you affiliate with your board of realtors, Winston-Salem, Greensboro, High Point, whatever, you join your firm tells you which board to sign up with. You go through new member orientation. And part of your new member orientation will be on NAR's Code of Ethics. And they'll go over the 16 articles. We as realtors are required to take Code of Ethics training. Now it's every 3 years. Your book may be out of date. They used to say every 4 years, and then they changed it to 2 years. I guess they decided 4 was too much, not too often enough. 2 was too much. So now the Goldilocks, we have to have our Code of Ethics training every 3 years. And basically what they do every 3 years is go through the 16 articles. You don't need to know the 16 articles for your exam. You'll learn those once you affiliate with your firm. But it is important to know that as a realtor, we do have a code of ethics to follow. The code's broken down into how we communicate with and deal with the people, other agents. Remember, for example, we said I can't solicit another agent's client. I have to honor the existing listing agreement. That comes from our code of ethics. So just know you got that coming. And you will. Again, it's 3 years right now. Subject to change. Like I said, NAR has done a good job. One thing I really like, again, once you guys get in the National Association of Realtors, 2 years ago, they did, it's called Fairhaven. And Fairhaven is a fictitious town. And you are the real estate agent of Fairhaven. You guys remember those choose your own adventure books? It's pretty much what Fairhaven is. So you as the agent meet with clients of diverse backgrounds, of different protected classes. And how you respond is determined on whether or not you can proceed or if you need to go back and get a little bit more training. So, you know, again, just good things like that for you guys to look forward to. You have to have a login and a password to be the agent of Fairhaven. And I'm not giving you mine. So you need to wait until you get your license and join NAR. But just a lot of good resources. There's a designation at home with diversity. So they offer, and again, this all just was reminded in April. I like that they do Fair Housing Month in April. Good refresher, good reminder. And that gets us through Unit 19. Just clipping right along, aren't we? Key terms on 475. Key point review, 492. Student quiz, 494. I've got some other good stuff in Learn Test Pass for you guys. I'll show that to you in just a second. Once you get these page numbers down. Everybody good? Got it? Going once, going twice. Okay. So let's look and Learn Test Pass real quick. Unit 19 material, just point out a few things I got for you guys in here. Of course, you got the quiz. There's some case studies. If you think, wow, that looks like Julie copied it from a book, I did. And specifically the book I copied it from is the Real Estate Manual. The Real Estate Manual is what you use when you come see me in post-licensing. The Real Estate Manual is about as thick as your pre-licensing book, isn't it? The good news is this one manual gets you through all 3 post-licensing classes. So the information you need is all, and this isn't a textbook, this is a manual. This is the real estate's manual. So what you're looking at, these case studies come from the manual. And again, they kind of give you a scenario and then ask you A, B, C, or D. So you can kind of test your knowledge. I like this again for examples, kind of help open your mind to various examples. I do have the solutions. I did include those. So once you answer the case study, you can go back and not only will it tell you the right answer, but why. This was an article. I'm not going to spend much time on this, it's more FYI, but buyer love letters in this market. Buyers are, when they submit an offer, they're submitting these love letters. And the Real Estate Commission and NAR are saying, careful, these could be a violation. If you get a letter that says, my family and I look forward to spending Christmases around this fireplace, in that one sentence, you hit on two protected classes, right? You talked about family and religion. So caution on the love letters there. And then fair housing. A lot of these topics we talk about in pre-licensing show up later in CE classes. So we just did fair housing again last year. So this is the material from the general update. Again, I don't, this is things 24 pages. I don't think you guys should sit down and read this, but there are more examples. And that's why I included that in there. And the solutions are at the very end. So you can get that information. And then the Real Estate Commission's Q&A on fair housing. So again, just good information on fair housing, not only in your book, but also in Learn, Test, Pass. 1 o'clock, Thursday, we're gonna do unit 18, we're gonna do unit 16, and then we start license law and commission rule on page 707. You guys have a good afternoon. Oh, we're gonna Kahoot too, so we'll Kahoot on Thursday too. 18, 16, 707. I will see you guys Thursday morning. Rebecca, let's see.
Bye, Miss Julie. Have a good day.
Are you still with me, Rebecca? Bye. Have a good day. There you are. Okay.
I'm here.